life is about expecting more, right? More from our relationships, more from our careers, and more from our money. When it comes to money, it's about peace of mind, convenience, and more returns. A smart and trustworthy partner is just what everyone needs, isn't it? FinCare Small Finance Bank. Wish more, get more.
Good afternoon, ladies and gentlemen. I'm your host for the next 2 days. I'm Abha Bakaya, and I welcome each of you to the inaugural edition of the Economic Times Financial Inclusion Summit, presented by MasterCard and our banking partner, FinCare Small Finance Bank. Though we have been kept apart by the global pandemic, we are thrilled to have all of you here for this virtual summit, and I hope that the next 2 days will start conversations that will come back to us in the weeks and months to come. The COVID-19 pandemic has been an eye-opener in many ways, but nowhere so as in highlighting the importance of inclusivity in creating a stable financial system. It's a reaffirmation of what India has long known, that financial inclusion is the primary catalyst for broad-based growth and development that is genuinely sustainable. Bringing more people into the mainstream financial system by creating better access to systems of credit, investment and insurance, in turn allowing them to build assets, has been a stated aim of the Indian governance model. For a country the size of India, it is but obvious that traditional public service delivery mechanisms will simply not measure up. Hence, digitization and fintech have become a mantra of sorts for policymakers looking to push the pedal on financial inclusion in the country. And we've seen some spectacular successes through them, the most significant being the JAM Trinity. Capitalizing on these successes means sustaining communication between the policymakers and the executors, the private players and the public sector, as well as maximizing public-private collaboration towards ensuring equal access to financial services and a level playing field for the most marginalized sections of Indian society. These are the very conversations that we hope to foster here at the Economic Times Financial Inclusion Summit. Through a series of 15 sessions, a combination of panel discussions, keynote addresses, and fireside chats, featuring some of the most important voices in private, public, as well as the policy space. Our goal is not just to deliberate, but also to inform and educate. And across 2 days and 2 tracks, we hope to do just that. In the main track of discussions, we will be touching upon subjects ranging from the bridging of the digital acceptance divide between the urban and rural populace to the tricky relationship between traditional banking institutions and new age fintech players, as well as conversations on the impact of direct benefit transfer on financial inclusion, best cybersecurity practices, financial literacy for women, and more. Importantly, in the second track of discussions, we have special sessions on technology for MSMEs, as well as on the challenges faced by women entrepreneurs in matters of funding and growth. And I invite you to join us for them in Auditorium 2 at 4 p.m. today and tomorrow. The conversations we start here are intended for the world at large, and we do hope you'll take them further. Whenever you do use our hashtags ETFIS and hashtag financial inclusion, and tag our handles on social media to join in the conversation. Also, between sessions, do take some time out to visit our special experience zones that have been set up by our partners, as well as a networking zone where you can interact with your fellow attendees. And if that has set the tone for the next 2 days of the Economic Times Financial Inclusion Summit, then we are just about ready to begin with our opening session. The speaker I am about to introduce is a 30-year veteran of the Indian Administrative Services. Following his long career in the services, the government sought his wisdom and expertise by appointing him to the 15th Finance Commission of India, and then in December 2018 by appointing him the 25th and current Governor of the Reserve Bank of India, where he has championed many policy innovations and initiatives. Under his watch, the RBI has strengthened its regulatory and supervisory framework and pushed tech initiatives. India became the earliest economy to adopt 24/7 payments and a new umbrella entity for Payments and Technology is now under works. As the pandemic struck, he moved swiftly to take interest rates to record lows, unleash liquidity to keep rates low, and at the same time kept financial stability paramount. Above all, the RBI's Financial Inclusion Index is his pet project. No wonder then that he was ET's pick for Business Reformer of the Year at the Economic Times Awards for Corporate Excellence earlier this year. Please join me in welcoming RBI Governor Shaktikanta Das.
Thank you very much. A very warm good afternoon to all the participants. I would like to begin by thanking the organizers of the Economic Times Financial Inclusion Summit for having invited me to address this August gathering. It's an excellent initiative, and I find that you have, apart from, of course, the Honorable Union Minister Sri Hardeep Singh Puri, who would be participating tomorrow, you have eminent speakers from across the spectrum, and I'm sure with their knowledge and experience, they will contribute to the quality as a starting statement. While we have made tremendous strides in this area over the years, the pandemic has created new challenges and complexities. The financial system will have a crucial role to fulfill the aspirations and the needs of an economy on the mend. It is therefore befitting financial inclusion is being organized at this juncture, and I once again commend the organizers
Over to you.
Thank you for that introduction, and thank you for the technical team for sorting out this slight disruption. I wish to thank the organizers of Economic Times Financial Inclusion Summit for inviting me to address this August gathering today. You have lined up an eminent group of experts, highly knowledgeable people, and I also note that you have the participation of Honorable Union Minister Sri Hardeep Puri tomorrow. So I'm sure you will have a highly rich quality of discussion. Financial inclusion, it's very important to say that in the beginning of any talk on financial inclusion, that financial inclusion is a key driver of sustained and balanced economic growth, which helps reduce income inequality and poverty. While we have made tremendous strides in this area over the years, the pandemic has created new challenges and complexities. The financial system will have a crucial role to fulfill the aspirations and needs of our economy on the mend. It is therefore befitting that a summit to deliberate on financial inclusion is being organized at this juncture, and I commend the organizers for the same. The overarching principle behind India's journey towards financial inclusion is echoed in the Gandhian philosophy, that is, Sarvodaya through Antyodaya, which means welfare of all through the upliftment of the weakest. The focus is on the basic objective of inclusiveness and equity, which go beyond poverty alleviation. It also encompasses equality of opportunity for all sections of society, including the poor, women, farmers, small enterprises, and others. The policymakers in India, that is both Government of India and the Reserve Bank of India, acknowledge the importance of financial inclusion early and have taken a number of measures to ensure that the benefits of economic growth percolate down to the poor and excluded sections of the society. I'm sure this forum today will deliberate on the emerging risks, new models of innovative and disruptive technologies, and areas of possible policy interventions. In my address today, I thought it may be apt to look at how far we have traveled on the path of financial inclusion, and I would also dwell upon the way ahead. While assessing the progress made in this sphere across the dimensions of access, usage, and quality, it is observed that India has come a long way in facilitating access to bank services to the last mile and in increasing the usage of financial products. Taking this forward, the National Strategy for Financial Inclusion, which spans over 2019 to 2024, that is NSFI, and the National Strategy for Financial Education, NSFE, which spans from 2020 to 25. Both of them provide a roadmap for a coordinated approach towards financial inclusion, financial literacy, and consumer protection. The National Strategy for Financial Inclusion document lays down several milestones and action plans to be implemented in order to make financial services available, accessible, and affordable to all citizens in a safe and transparent manner to support inclusive growth through a multi-stakeholder approach. Let me focus to begin with on the developments so far. The financial inclusion journey of the country can be traced back to the 1950s, when the focus was on channelizing of credit to the disadvantaged sections and sectors of the economy and weaker sections of the population. This was followed by various initiatives over the years, such as expansion of branch network, introduction of the priority sector lending, launch of the lead bank scheme, promotion of self-help groups, joint liability groups, implementation of business correspondents, that is BC model, among others. The brick and mortar branches, complemented by the BC model, have improved the reach of the banking system across the country. The spread and reach of financial inclusion has indeed been exponential, especially in the recent years. The evolution and adoption of technology has led to massive improvement in deepening of digital financial services. The Jandhan Aadhaar mobile, that is JAM ecosystem, has brought about a major shift in the universe of financial inclusion. Further, several initiatives have been taken for the creation of enabling digital infrastructure at the ground level so as to universalize digital payments in a convenient, safe, secure, and affordable manner. Given the latent potential of harnessing value at the bottom of the pyramid, we have seen a plethora of players emerging in the field, ranging from traditional banks, niche financial entities such as payment banks, small finance banks, microfinance institutions, and promising fintech companies. In order to have a planned and structured approach to financial inclusion, banks have been advised by the RBI to put in place financial inclusion plans consisting of achievements against several parameters. Substantial progress has been made with respect to these parameters, details of which are given in the Reserve Bank's annual report released in May 2021. Greater focus is now being given to addressing the vulnerable segments of the economy and population, while paying attention to consumer protection and enhancing capacity of customers so that responsible and sustainable use of financial services can be achieved. The introduction of differentiated banks catering to unique needs of varied population groups was a step in that direction. In recent past, the challenges that have engaged our attention are: number one, how to identify the customer, the last mile, and number three, how to provide relevant products which are affordable and safe, catering to diverse needs. The digital ID, that is Aadhaar, along with proliferation of mobile phones with world-class payment systems, have addressed the first two challenges of access and usage to a large extent. The third challenge, that is quality, requires both demand and supply side interventions. Opening up of, that is the launching of and the opening of Pradhan Mantri Jan Dhan Yojana accounts, that is PMJDY accounts, has enabled millions of Indians to have access to financial services with a basic bouquet of financial products. This has addressed the supply side issue to a considerable extent. The demand side interventions focused on creating awareness amongst the public. Financial literacy, customer protection, and grievance redressal have become areas of focus for furthering sustainable financial inclusion. Setting up of the National Center for Financial Education by the regulators and implementation of the financial literacy, implementation of the Center for Financial Literacy, that is CFL project of the RBI, are two recent initiatives towards improving financial literacy. Payment systems are seen to be lifeline of an economy. They are increasingly being recognized as means of achieving financial inclusion and ensuring that economic benefits reach the bottom of the pyramid. It is quite well known by now that India is among the leaders in the world with regard to development of state-of-the-art payment infrastructure and products, leading to a wider adoption of digital payments. To give an example, the number of prepaid instruments, that is the number of PPIs, increased at a compounded annual growth rate, that is CAGR, of 53% from 41 crore in May 2017 to 226 crore in May 2021. These trends indicate that such instruments have become immensely popular for making small value payments. The movement towards digital payments has also been facilitated by the introduction of fast payment systems such as Immediate Payment Service, that is IMPS, and United Payment Interface, UPI, which provide immediate credit to beneficiaries and are also available around the clock. The extent of digital penetration can be gauged from the fact that each day, on an average, during the month of June 2021, the payment systems in India processed more than 15 crore transactions, amounting to nearly 4.5 lakh crore per day. The UPI platform facilitating payment transactions through smartphones has revolutionized the payment landscape in India. UPI has witnessed over 280 crore transactions in June 2021. Globally, there has been a lot of interest in UPI. Similarly, the Aadhaar-enabled payment system, that is AEPS, facilitates funds transfer and payments and cash withdrawals through micro ATMs and BCs using the Aadhaar authentication. During the pandemic, cash transactions at BC outlets through micro ATMs have witnessed significant surge, with more than 94 crore transactions accounting for rupees 2.25 lakh crore during 2020-21. Let me now focus on how the response to pandemic has been from the point of view of financial inclusion. In India, the second wave of the pandemic has taken a grievous toll in terms of lives and livelihood. The recovery that had commenced in the second half of 2021 was dented by the second wave of the pandemic in April and May this year. Our efforts towards financial inclusion have helped in enabling the government to provide seamless and timely financial support to vulnerable sections through direct benefit transfers, that is DBT. One of the important components of JAM Trinity, that is Aadhaar, the world's largest initiative to provide biometric identity, has facilitated financial inclusion through innovative digital platforms. The NAC Aadhaar Payments Bridge system and PMJDY, I repeat, the NAC Aadhaar Payment Bridge system and PMJDY together have been instrumental in enabling an effective usage of available banking facilities, which came to the fore during the pandemic, with cash benefits under the Pradhan Mantri Garib Kalyan Yojana being disbursed to these accounts. As on date, there are about 42.59 crore PMJDY account holders, with more than 55% account holders being women. The impact of the digital payment in DBT can be discerned from the fact that rupees 5.53 lakh crore was transferred digitally across 319 government ministries, across 319 government schemes spread over 54 ministries. I repeat, across 319 government schemes spread over 54 ministries during 2021. To mitigate the financial impact of COVID-19 related disruptions, the Reserve Bank has taken several policy measures to ease flow of credit at a lower cost to the needy segments of our society. These measures of RBI include lowering of the policy rate, launching of on-tap liquidity schemes and channelizing of liquidity through all India financial institutions, and facilitating financial institutions to resolve stressed loans to individuals, small businesses, and MSMEs. The cash reserve ratio, CRR exemption on credit disbursements to new MSME borrowers, priority sector lending classification for bank loans to NBFCs for on-lending, and priority sector classification for loans from small finance banks, that is SFBs, to microfinance institutions, MFIs, for on-lending, were additional measures taken to promote credit flow to the affected sectors. As you can see, the focus has been mainly on small businesses, on small entities, on MSMEs, and on individuals. at the lower rung of the society. Further, with an objective to provide more focus on inclusive development, the Reserve Bank last year broadened the scope of priority sector lending by several measures. And these include, number one, we included startups in the priority sector lending category. Number two, RBI enhanced the limits for lending to renewable energy sector under priority sector lending, that is PSL umbrella. Number three, RBI has also increased the targets for small and marginal farmers and weaker sections under PSL lending. And number four, we have also incentivized banks to augment credit flows to districts with relatively lower credit penetration. The pandemic has accelerated the push towards digitalization with greater adoption of digital payments. It is important to take steps to converge greater digitalization with goals of financial inclusion. Operationalization of the Payment Infrastructure Development Fund, that is PIDF, an initiative of the Reserve Bank together with the banks and card networks, will provide the necessary impetus for development of payment acceptance infrastructure in Tier 3, Tier 4, Tier 5, and Tier 6 centers, and also in northeastern states. This will facilitate greater deployment of electronic payment acceptance facilities, for example, point of sale devices, in hitherto untapped areas, thereby furthering the reach of digital payments ecosystem. Similarly, the Reserve Bank pilot project in association with banks of making at least one district in each state or union territory 100% digitally enabled, which was rolled out in 2019, covering 42 districts, will facilitate greater access and usage of digital payments by the common man. As on March 2021, banks have achieved digital coverage of 95.9% of individuals, while achievement for businesses stood at 89.8%. I've explained the details of this in the footnote of my speech. A copy of this speech, as you may be aware, or I would like to inform, will be uploaded in the RBI website after my speech is over today. The SLBCs, that is state level bankers committees, have also been advised to give renewed focus and emphasis to ensure sustenance of the digital progress in these identified districts. Further, in order to promote universal access to financial services under NSFI, access to some of the banking outlets has been provided to 99.9% of targeted villages within a 5-kilometer radius, or hamlets with 500 households in the hilly areas. The pandemic-related restrictions on mass gathering of people at various public places has necessitated a relook at conventional financial inclusion and financial literacy camps. During the pandemic period, enhanced recourse to alternative approaches like using the social media, mass media, that is including local television channels and radio, was undertaken across the country to continue dissemination of financial education. Let me now focus briefly on the post-pandemic world and what is the likely way forward and what should be the way forward. In order to make the post-pandemic recovery more inclusive and sustainable, financial inclusion would continue to be our policy priority. Considering the complementary role played by microfinance in bridging the gaps in the last mile, a consultative document for harmonizing the regulatory frameworks for various regulated lenders in the microfinance space has been issued by the Reserve Bank recently. The primary objective is to address the concerns relating to over-indebtedness of microfinance borrowers, enable market mechanism to rationalize the interest rates, and empower the borrowers, especially the small borrowers, to make an informed decision by enhancing transparency of loan pricing. The scaling up of the Center for Financial Literacy project, that is the CFL project, across the country at the block level by March 2024. If you may recollect, a few months ago, we have announced that this project, that is the Center for Financial Literacy project, which was earlier restricted to certain limited number of districts, we have now extended it to all districts in the country, and we propose to achieve 100% reach. We propose to cover all districts in the country by March 2024. This initiative is expected to enhance the effectiveness of community-led participatory approaches for greater financial literacy. Further, recognizing the importance of inculcating financial literacy concepts at a young age, which is one of the strategic goals of the National Strategy for Financial Education. Sorry, I think there was a mix-up. Let me restate it again. Further, recognizing the importance of inculcating financial literacy concepts at a young age, one of the strategic goals of the National Strategy for Financial Education is integrating financial literacy content with curriculum for the school children. So far, 15 state educational boards have included modules on financial education in their school curriculum. These approaches are expected to strengthen financial education at the grassroots level so as to realize the vision of creating a financially aware and empowered India as enunciated in the NSFE. To measure the extent of financial inclusion in the country, it has been decided to construct and periodically publish a financial inclusion index. The first of this series of indices which we will be releasing, it was an announcement made about a few months ago. So the first index will have, the index will have parameters across the three dimensions of financial inclusion, that is access, usage, and quality. I repeat, the index will have parameters across the three dimensions of financial inclusion, namely access, usage, and quality. Work on financial inclusion index is underway, and the index will be published shortly, very shortly, by the Reserve Bank. As I conclude, I would like to reiterate that financial inclusion promotes inclusive growth by way of making financial services, including credit and other safety nets, available to the bottom of the pyramid. Lessons from the past and experiences gained during COVID-19 pandemic clearly indicate that financial inclusion and inclusive growth reinforce financial stability. Greater financial literacy and education, together with sound consumer protection mechanisms, will ensure that people at the bottom of the pyramid are empowered to take informed financial decisions. This will also enable banks, NBFCs, MFIs, etc., to enhance their customer base and products and diversify their balance sheet. I would like to emphasize that we must continue our efforts for greater financial inclusion in pursuance of the goal of sustainable future for all. There is need for accelerated universal reach of bank accounts, along with access to financial products relating to credit, investment, insurance, and pension. It is the responsibility of all stakeholders to ensure that the financial ecosystem, including digital medium, is inclusive and capable of effectively addressing risks like mis-selling, cybersecurity, data privacy, and promoting trust in the financial system through appropriate financial education and awareness. These efforts have to be supported by a robust grievance redressal mechanism. I look forward to the interesting ideas and thoughts emanating from this forum and these deliberations which you would be having over the next 2 days. And I'm sure they would certainly enhance the process of financial inclusion in the country. I will stop here. Thank you. Namaskar.
Thank you, Mr. Das, for that illuminating address on financial inclusion. A quick reminder for all our attendees that the special track session on technology for MSMEs will be taking place in Auditorium 2 at 4 p.m. and I invite each of you to join us for it. So now it's time for us to jump into the thick of things with a panel discussion, one which seeks to address the key challenge facing the move towards greater financial inclusivity in India, that of the digital acceptance divide between the rural and urban populace of the country. The COVID-19 pandemic has caused a dramatic shift in pushing consumers towards online channels, and the industry has responded similarly. According to a 2020 global survey of executives conducted by McKinsey, during the pandemic, industries have accelerated the digitization of customer and supply chain interactions, as well as of internal operations by nearly 3 to 4 years. India's biggest challenge in the face of this quantum leap is to capitalize on it on the rural side, by building a last-mile delivery system for financial services that is not just robust and secure, but also accessible enough to bring in even the most marginalized of consumers on the rural side. Deliberating on this matter, we have voices from a cross-section of the banking and finance industry, and I hope that you will add your own voice to the discussion. Our hashtags are #ETFIS and #financial inclusion. Do tag us on our social media handles as well. And now for the discussion.
Access to financial services is considered as a precursor for economic growth and poverty alleviation. Though India has leaped ahead in digitizing its economy, it's still a far cry away from taking this convenience to its rural folk. The esteemed panel gathered here today with me will discuss ways and means and what more can be done to bank the unbanked. Thank you, gentlemen, for joining me today. Mr. Gupta, let me begin with you first. Kotak Mahindra Bank had started, this whole agenda of Kona Kona Kotak. This was obviously launched pre-pandemic. Since then, you have brought about a lot of services. What sort of changes are you seeing in the last 1.5 years? We've seen, just when the pandemic started, everybody was like, wait, this is not a demonetization moment. But now we are seeing this significantly move the needle. What's your sense?
Well, Saloni, the Kona Kona piece was probably more urban than the rural piece which you really mentioned. And it really was something which was, we started much before what we talk of as COVID. I think post-COVID, after the first couple of months of, wondering what to do and, if you can do something, I think all of us saw it as a very significant opportunity. But, the big change which really happened is post-monsoons last year on the agri side. If you look at during the COVID, the entire COVID wave 1 journey, while urban India, we were struggling with trying to reach our offices and get back to our jobs, rural India was pretty much straightforward. Yeah. Practically untouched, not impacted, and not affected, and not probably bothered because rural India was doing pretty well. And that really got all of us started thinking that, hey, here is a very different kind of opportunity. And, as you progress, what you realize today is that the rural part of the economy is heading for what I call a super cycle. Yeah, it's a very different cycle. And then, these cycles come every 4 or 5 years. And we've seen probably 1.5, 2 years of that cycle. but the big ones still expected to come over the next 2 or 3 years. And you look at all rural metrics, all of them doing wonderful, whether it's on the production side, procurement side, or on the prices side. So expect the rural economy to grow phenomenally. That will give a lot of money in the hands of farmers and rural folk. And whether it is out of payments, whether it is out of lending, it is out of saving, it is out of protection, whatever. I think all of those opportunities will come. So some of us have just made a very small beginning from last year in trying to access those markets through digital channels. But I think the big news is still to come.
Definitely. Mr. Katpalia, if you can come in here, you are doing a lot of work on this side as well, and also on the MFI side with Bharat, Financial. When we talk of taking financial services to rural India, we first talk about payments and transactions, but it's a whole gamut of services: pension, insurance, SIPs, mutual funds. What is the sense that you're getting? How has this really changed over the last 1.5 years?
So, we are one of the larger players in the rural India. In fact, we are present in 125,000 villages of the country and deep villages in the country. And I must say that the adoption, the next generation of rural is mobile ready. And I think that's a statement which I'm making, that don't believe that rural is backward. 35%, there is 33% penetration on internet, and there is a 37% penetration on smartphones in rural India. So let's not assume that rural India is backward. I think they are adopting technology. The government mandates have also helped them. So I think the support on Jandan, what was the jam, the has now translated to the BHIM, through the UPI payments. I think there is a lot of progress which has been made on the rural India side. We believe that the last 18 months has been a transformation in the rural India. And we've been able to disburse loans in seven minutes out of which was happening on 7 days. I think the way we've used the APIs for the government of India, I think has helped us do the disbursements of loan. We created an app called Sampark, where collections, actually we created a contact with the clients. And if you do contactability with the client, and through the joint liability group, we created an app where the joint liability group could come together and create a contact with us. And I think that helped us in our collections capability. So I think the payment capability which has been created through the UPI has really helped us. And what we did additionally, see, rural will always remain a little bit of digital. And we created Bharat Money stores. So in rural India, we created 70,000 stores, and we're going to go to 200,000 stores, where people who do not have access to smartphones or capabilities on digital can go to a nearest Kirana store and get all their payment transactions done without visiting a branch. So I think that was a transformation idea which we did, and it really helped the rural India to large extent. We're now going into what we call near rural areas. So we are in deep rural. We are also going to near, where tractor financing, Kisan credit cards, as well as loans are coming together, and that too in a real digital manner. So I think we've adopted digital. 43% of our book is in rural India, and we believe that that's a huge opportunity in the country right now.
Mr. Asbe, if you can come in now. You're the man of the moment. Even pre-pandemic, you have been burning the midnight oil. I'm sure in the last 18 months, you have been figuring out what more can be done, on the financial services and digital space. How do you see these last 18 months really changing the paradigm in this segment?
Saloni, thanks for having me here. And as you rightly said, we have been very busy last 18 months, even during the pandemic, and most of us working from the office for all 18 months to see what can we do more and get better and better in terms of service delivery, whether it's rural India or urban India. Fully agree with what Mr. Katpalia said, that India would remain digital as far as rural economy is concerned, and what it means is it's going to be combination of the self-service, which is using the JAM Trinity, and also looking at obviously getting UPI there, and also looking at physical touch point. High tech, high touch is what we call about using the business correspondent, right? And what we believe is the payment is the basic backbone of all the services. And once it is used for digital onboarding or start getting the services through the business correspondent physically, it steps up the stone for consumer to do more things, consumer to start looking at further financial services, whether it's investments, insurance, or lending, right? And I think the backbones which has been created by NPCI, whether it's UPI, whether it's AEPS or the DBT platform, which government used very effectively in the COVID situation, has proven really helpful to the country in this wanting time.
Samir, if you can comment on this, you're serving more than 19,000 PIN codes now into the country. I mean, 5 years back, no one could have imagined that somebody like a PhonePe, would come in and, take the market by storm. What's the sense? The last 18 months obviously have been very busy for you. You are achieving landmarks one after the other with 1 billion UPI transactions in a month. If you can just give a rundown on how you have seen these last 18 months.
It's been a difficult period overall in the market, but I think picking up on something Deepak sir said, one interesting thing that we saw last year in the first wave, the rural parts of India were largely unscathed. It was the few metros that were really hurting, and as soon as the national lockdown was done, we actually had a choice to make. We could either wait and just grow sort of at a particular slow clip across the country, or we could double down on rural India, and we chose the latter because I guess partly we're just impatient to get there and cover the country, but partly because it felt safe enough. And over the last 18 months, we have now about 50,000 odd correspondents or agents on the ground across the country. As you correctly mentioned, we are now in about 4,500 of the 5,500 talukas in India. We as broad-based as we could get. What has really amazed me is not just the willingness of people in rural India to adopt our technology, but actually I think a lot of us got it wrong pre-pandemic. I think we assumed that their learning curve will be higher. In many cases, whether it's bill payments, it's utilities, whether it's recharging a mobile, the services were not reaching the people who needed it the most. When you're in a small town and you need to go and buy an insurance policy, you may have to actually travel to the nearest town. If you have to pay your electricity bill or any of these things, I mean, it's a walk. It's a long, determined effort. So these populations, and in fact, tier 2 and beyond, now account for about 80% of our users, right? It is the fastest growing segment. About 85% of every new million users that adopt PhonePe are from tier 2 and beyond. 70% are tier 3 and beyond. Rural India right now is the fastest growing segment for us, both on offline transactions as well as on utility payments. And I think that has just been eye-opening. It also gives us a lot of confidence that when we go past payments into financial services, if the products are customized, if the price points are right, I think to Dilip's point, it'll be a hybrid play. I think there'll be a decent segment of millennials in the rural areas who will adopt a lot of these products, SIPs and stocks and insurance products, purely digitally. And that will be the first frontier for us over the next 18 months. And then I think there are people who will need the BC correspondents or the small shops in the neighborhood to get them over the hump. But those shops will be fully digitized. So we are seeing explosive growth on payments pan India, and I mean, Dilip and I have been working on the UPI ecosystem for 5 years. He told me we'll get to 100 million transactions a day on UPI a few years ago, and I think we were both saying that almost in disbelief. I think we're almost there, right? 2.8, 2.9 billion transactions on UPI alone. You add cards and wallets. I mean, India is doing 100 million transactions a day. It'll get to 1 billion in the next 5 years. But I think there's a critical mass of people in every urban and rural household today, or neighborhood for sure, that are starting to educate those around them. The network effect has started happening. People are saying digital is smarter. And I think that is very, very exciting for the future.
Mr. Gupta, if you can come in on this, what's the right formula? We have seen, the people talk about the death of debit cards, talk about the death of branch banking since the time I've started covering banking for that matter, which has been more than a decade. But what is the right formula here? Mr. Katpalia actually pointed a very, important point here. He said that don't think that they are backward. They have the smartphone, they can do these transactions. Phygital is the way forward. Mr. Raspe also said that phygital will be the way forward. What is the right formula? Physical, digital, BC network, micro ATMs, ATMs. What do you think?
Well, I think there's no right formula. Matter of time through which you have to go through till what Samir mentioned as the network effect starts kicking in. Yeah, and then you got to wait for the new millennial, the millennials to pick it up. And all of this basically has to start from the payments piece. I think the payments piece was facilitated by mobile, by the smartphones. As the penetration of the smartphone becomes wider, the payments acceptance will become wider. Today, bulk of the payments you see may probably in that sector be primarily recharge. Yeah. But as the comfort with the technology and the convenience happens, yeah, that will provoke them to start doing everything else. And I'm coming back to this whole piece. Watch out. We are into a super cycle on the agri front. Okay. The next 2 to 3 years will put hell of a lot of money with all of them. We just have to capture it. It has started small way from the payments piece, but as the comfort, with dealing with non-cash happens, I think it will just expand greatly. You see, lending, you look at lending, what Suman mentioned about it. It is still an insignificant portion of what the rural piece wants. Yeah, we're talking of billions number and billion numbers in transactions, yes. But wait till it starts moving into convenience on the lending. And then thereafter on the protection front. Each of these are huge opportunities. When you look at the other side, phygital, I think what we are seeing really is retail customers are gonna take up digital very, very fast. And you will see penetration levels, reach 90% plus. It's the non-retail, which is what I call the more the mom and pop shop part of it, since they have to deal a lot more with cash, and that piece is not going to go away overnight. I think a lot of the physical piece is required to service the mom and pop shops, not the retail customer. I think retail will just zoom into digital big time. And digital meaning it will be mobile. So I think some people may not like it, but the days of plastics also will just vanish in a very, very short period of time. At least that's what my belief is.
Mr. Katpalia, taking a cue from what Mr. Gupta mentioned, what are you doing to capitalize on this super cycle, which he says will soon come in on the rural and the agri front? Actually, this reminds me of some data which the RBI shared as part of the financial stability report, as how the retail space has really captured the lending. From banks from 2014 to 2020, it's almost 20% of the share that they have taken away from corporates who have moved towards segments like bonds and other forms of fundraising. Where do you see this opportunity?
So let me tell you, I think these are cycles. First, let me answer the first question, and I like that question of yours as to where do you think branches will disappear? And I think a very valid question, and is a thought-provoking question with a lot of management teams are discussing today. In my opinion, I think you have to take this as a function of geography, client segmentation, and regulatory, guidelines. And all these three will have to play a very big role in deciding what will happen and in each of the country. And of course, the fourth point is infrastructure, which I miss out. I think on rural, it will always be phygital, but will be led by banking correspondents to a large way, and the hub and spoke models will continue to play. So we've got 100% subsidiary in Bharat Financial, and our whole banking correspondents are self-owned. And we've got about 18,000 outlets covering 100,000 villages, 125,000 villages in that area. So hub and spoke through the banking, and all these banking correspondents are linked to your branches in the rural areas. So you have about 600 branches in the rural areas, which cover your 16,000 outlets, which cover 125,000. And it will be phygital to some areas. And of course, now you're creating what we call as the Bharat Money stores. And we want to have 200,000 stores by the end of next year, which means that you will have a banking correspondent model, which is about 20,000 of your own and 200,000 of Bharat Money stores, which actually facilitates the rural transaction in 28 states of the country. Now, when you go to the urban and the semi-urban, I think the situation changes. I think the branches will look more from a client perspective of the confidence that the bank exists. And there will be walk-in, the walk-ins are reduced in the branches. More and more digital will come into play. And I think what will happen in out there is a transformation which is happening in digital. If you look at digital 1.0 in the country, it was more transactions. And I think most of it were captured by payments or the fintechs. You do a product transaction, you do a loan opening transaction. I think digital is changing. It's frictionless. And I think what is going to happen is going to be driven by clients' data. It will be driven by creating, hyper personalization experiences for client basis data analytics. And I think that's going to start happening, but branches will coexist as a consequence. You may not need 5,000 branches. You may not need 3,500. You may have okay with 2,500 branches. I think beyond that, the country doesn't need the branches, and this will start happening, in my opinion. To answer your question, how will you capture this? I think I told you 43% of our portfolio sits in rural. We are very big in commercial truck financing. We are very big in tractor financing. We're number 2 to Kotak on tractor financing. We do about 500 crores of tractor loans every month. So we are very big in Kisan credit cards. We are very big in microfinance. So we've got a portfolio which is really rural dominated. What is changing? We've now got car loans and personal vehicles loans getting into the rural wallet. And I think that we're tying up we have a hyper connection on a digital channel with the OEMs, and all the processes happen digitally. The customer in the rural area just has to travel to the dealer showroom to pick up the scooter or the tractor or the car. So I think digital is already there in the rural areas. All microfinance loans are disbursed digitally. The client wants all 99.6% is digitally disbursed. The collections needs a phygital experience, and the withdrawal of money may need a phygital experience, where they would want to go to Bharat Money stores or they want to withdraw through so Bharat Money stores act like micro ATM. They go to the Kirana shop, enter the date, and they can withdraw the money at the church. Rather than keeping the whole loan at home, they actually go ahead and go to 10 steps away Bharat Money stores and get the withdrawal out. So I think we've changed. I think 1.24 crore transactions happened last year through the Bharat Money stores itself. So I just want to give you the things which are changing in rural. I think rural is becoming digital, but it needs a physical presence also.
Mr. Aspe, NPCI has had a significant journey, since its start. We saw quite innovative products from NASH and IMPS, and then we had the entire UPI, which sort of really has changed the way India does its transactions. But what are you doing to make NPCI future ready? We are anticipating an influx of these digital transactions, which could put load on your systems as well. What is really happening inside NPCI at this moment?
So a great question, Saloni, and this kind of keeps us awake on two sides. One is continuously enhancing our cybersecurity protection framework. And second is, how do we keep on building the capacity in NPCI systems so that whatever happens, NPCI doesn't fail. Whether it's a scheduled downtime, unscheduled downtimes, eliminating those completely. We work on a concept called 4D, which is, and one of the D's is downtime. Zero downtime is the concept we work on. There has been a lot of work last few months on this, and because this is the one issue which regulator is also extremely concerned about, and they keep doing reviews with us. And recently, we have scaled up our UPI infrastructure to a billion a day architecture. What it means is now what we are at 100 million financial transactions, 100 million non-financial transactions. So about 200 million is the daily volume on UPI. So we upgraded that to a billion a day architecture. Recently, we moved IMPS. We are in the process of moving AEPS. So slowly, what we will do is move most of our payment systems to a very, very large capacity, right? So that gives us a confidence that even if there is a surge or a scale up, we will be able to deal with it. So this is the point number one. The second is a lot of things on a business side also needs to be done in terms of looking at, as Mr. Katpalia was saying, Mr. Gupta was saying, and Samir was saying that the rural market will not adopt as is various basis what the urban market has adopted, right? So we will have to create a customized solutions, and that customized solutions will have to deal with feature phones, right? NPCI has actually not delivered its promise on feature phones. Obviously, we keep talking about the charges on USSD as one of the hindrance, but obviously, we have been working very actively to create the feature phone based payment solution, and we started some pilots on that, and soon we will roll this out in next 2-3 months time. The second thing, which is very encouraging, that because we need touch points, we need infrastructure in the rural, right? So when you look at, and then what it means is require investments. It won't happen free of cost. Yeah. So we are relying that the RBI's PIDF it's the Acceptance Infrastructure Fund will at least create 10 million touch points in the next couple of years time, which is having a POS or a digital QR in the rural market, which will actually kind of create a huge supply when you look at the digital payments is concerned. The second thing is we are also hoping that the digital payment incentives by the government announced by the honorary FM in the budget will also help us to encourage the ecosystem to create more acceptance infra, to educate customers and bring in more and more customers to digital payments framework. The third thing is, we are working on BBPS, which is Bharat Bill Pay. And recently regulator has announced that, we can, the category restrictions was moved, and now the prepaid recharges has been now allowed to be on board on BBPS. So again, we have a objective that taking BBPS to a big way to this rural market while leveraging on UPI, leveraging on the business correspondent and AEPS. So we are looking at various mechanisms that how do we now penetrate the rural. It's very, very important issue which gets discussed in most of the conversations with the regulator and the government. Both are very keen that now it's a right time to start penetrating with the digital modes, with more and more services to the rural market, and obviously supported by the increasing infrastructure at the rural locations.
Samir, if you can, comment on this, what's your sense, on the rural market? I mean, I have heard a lot of players saying that investment in rural market is less because, it's a little counterintuitive because MDR has been taken away. Institutions don't want to, invest infrastructure where they see that, oh, where's the return there? So what is your sense? Do you see that companies like yours are willing to make such investments?
It depends on what your runway is and your outlook is, right? I think for me, rural is smart. It's smart because that is, in fact, the largest underserved market. Is the per capita as high as the top 10 cities? Absolutely not. But some point the population dividend will play out. I have a slightly different way of looking at these markets because I come from the outside, right? To me, it's a sector. Financial services is, the first venture was music, the second was retail, third is this one. Let me give you my perspective. I think the phygital conversation is more forced than real, because it doesn't represent the consumer's choice, it represents infrastructural gaps. So let's take payments. You talked about cards. Been thinking about this for a while, trying to understand why UPI really took off, right? And I think COVID's just been a great way of reminding ourselves, but it was happening without COVID. The last 3 times I've used my debit card in 18 months. One is when I need to set a UPI MPIN because the debit card is the entry to authenticate yourself. The second is when I had to go into net banking and increase my transaction limits. I had to wire some money, and the ATM PIN is required, or the debit card number is required. Again, an authentication mechanism. It's literally become a what you have. It's like an Aadhaar card for banking. The third is the ATM, where I want to take my own money out, where for some strange reason, after billions of transactions happening digitally, at the ATM, I still need to insert a physical card. I, honest to God, on the debit card side, can't remember the last time I went to a place, whether organized or unorganized, particularly unorganized, where I didn't see a UPI QR code. And I would contend that the UPI QR code coverage, we have about 23 million odd merchants now in the country. Rural is about 6 million for us. I think is almost 100 times higher in real actual usage than the POS devices. The POS devices, the top 100,000 merchants in the country on the Pareto probably account for 80% of the transactions. That's just the reality of the card usage. What is it telling us? Even at 50% adult population, 50 to 60% adult population coverage of smartphones, people were so hungry to use their mobility and save their time, they value their time across rural, across urban, across millennials to senior people. People value time. We've always assumed people don't value time in India. I think that's a big myth. So the minute you said your phone can be your easiest mode of payment, people stop using net banking, people stop using cards. Now what is remaining? Banks, as the manufacturers, were also the destination on the technology front back in the day when it came to mobility. So it was natural that if you have a branch, you also you're building the first generation app. The government democratized and NPCI delivered on the promise of making payments secular. Now I can pay using my favorite application, regardless of the bank. The bank to me is a manufacturer. That's the issuer. Now let's talk about lending. On the lending side, why is rural India not getting loans? This is a much debated topic. My submission is one is access. I don't think phygital is the answer. If I have to go to a branch and with all respect, all of these data points, if you have 50,000 people covering 500,000 towns or rather villages, that means per capita, there's still a line queuing up if I wanted to get a loan. That doesn't work. I should be able to get a loan without a card and a bank branch, those two things. Today, credit card, why is everyone saying credit card? Why is credit not gone digital? Because tech companies don't have a brokering layer like NPCI where we can democratize access to credit. It's just that, it's that simple. If loans were available through a federated layer of manufacturers on an API, if NPCI could basically send a request for loans with the same information and the same KYC data to all the banks simultaneously, and it was like a live auction, like an eBay, saying this person is credit worthy, this is their score, hit whistle. This person's KYC is done, you hit eKYC. And then there's a lender saying, I want to lend. The manufacturers are actually democratizing access. The tech companies will get lending to 500 million people. Here, technology is not the disabler. Here, the regulation is basically, and the banking system, there's an incumbent challenge. The banks don't want to democratize access. And on the other side, there's a regulatory concern and collections. I think that is the next massive tsunami that's going to come. If you add up account aggregator, which is looming, and the fact that the credit bureaus start getting more data through BBPS and other systems about consumers' bills, all this data wasn't there available earlier. If there's a digital credit file on all of us and everyone who works in our homes and then their migrant families, you will find very quickly technology will reach them in a way. I don't think millennials want to walk into a branch for anything. I think the branch is forced.
Fair point. Mr. Gupta and Mr. Karparia would like you to respond on this, but just one addition here. we've seen, companies like PhonePe, Google Pay, and Paytm really take over the UPI market well, while they're sitting on the banking infrastructure itself. But I mean, today I use a PhonePe or a Google Pay to, make UPI transactions rather than going through my bank account and making those payments. So the challenge is really huge for incumbents like yours to really, take on the market, because the rural pie, even companies like PhonePe are fighting for it, and they have deep pockets. So what's your sense? It's a challenge. It's a huge challenge for you. And, how are you preparing yourself to deal with that? If Mr. Gupta can go first.
Yeah, okay. So, what Sameer mentioned is an important point. If you look at all the MFIs, customers put together today, we're talking of about 9 to 10 crore customers, which probably is just about maybe 10% or maybe 20% of the rural potential customer base who will require borrowings. And there is no way today to easily reach out. The traditional bankers like us are far more concerned about the risk part of it. And we're not willing to experiment because we've been through cycles. We've been through cycles where you do take a beating, and you take severe beatings in some of these. But Sameer and his set of fintechs can take some of those risks. So I think to some extent it will be a collaboration, between these two. Because some of these are, new paths. These are, paths where no one has treaded before. But that opportunity, I can tell you, is there. And back to, what I talked about, the super cycle. All of these customers will have a lot of money over the next 2-3 years. They will want to save more. They will want to spend more. And we will have to, in some way or other, facilitate. If the bankers don't take the initial risk, probably the fintechs will take the initial risk, and the bankers, the old generation, like I say, the gray-haired people like us, will come in slightly later. But the fact that all of these will be digitally enabled is bound to happen. I don't see any way. I think, again, what Sameer mentioned about the payment generation, the payment piece is more or less there. Dilip and his team have done a wonderful job of that part. We have to very quickly graduate, and we will, whether we like it or no, have to graduate to the other part.
Mr. Kapadia, if you can comment on that, the risks involved here.
So I tend to agree with Sameer. I have a very, I also feel that, I think the payments piece, and I think has been arbitrage and is gone to the types of Google Pay or the Aadhaar. I think it's happened. We must admit it, and I think that's a reality, because the convenience of payments has happened there in a large way, and I think the banks are collaborating with these payment partners to make sure that their clients get a seamless experience through the payments as we go. I think the only difference I want to point out, while the collaborations are happening, I think fintechs or people who went into, I think, algorithms or lending basis algorithms, I think not so many have been successful. And I think the lending piece and the way the regulations are and the way it works is slightly different. And I think the type of capital requirements, the way the recognition of NPA and the way underwriting has to happen, I think is a little bit different. It's happening. I think as the data increases, as the payment rate increases, and the country gets more digitized, it will continue to happen. But the only difference I want to leave with you, I think fintechs are more focused on the next 100 million unbanked, and we are focused on the last 100 million who want the microfinance. That's a very big difference, and I think rural is a big opportunity. There is an urban opportunity where a lot of people are focusing, and I believe the last 100 million are really the big opportunity in this country. I think a lot of, and I am talking about tier 4 cities and below. And I believe that's a huge opportunity which we are capturing. And microfinance and even the scooter finance is actually focused on those parts of the areas.
Mr. Azmi, if you could take the last word on this. You have a clear sense on what the government, what the RBI is really thinking. You yourself mentioned, that how both the aspects of this economy are clearly concerned about how we penetrate, the rural India. What more is expected on that?
So one clear thing which I spoke about is there is a need to deploy the infrastructure. I'm saying that, and it can't be a free lunch. So obviously somebody will have to pay for it, and that has to be invested into, right? Thinking that you're going to make money in the next few years. So one is you require an infrastructure. On the as some of the speakers have been talking about, to get the credit to the rural, obviously we require data. I think the data will be there in the next 6 months, 1 year. I think the data will be there on table as more and more people adopt the digital payments and the bill payments and those kind of services. In my assessment, the urban needs on credit and rural needs on credit are going to be very different, right? And some of the speakers have been talking about. So there, if the rural, in the urban side, if the ticket size is 25,000 on an average basis, in the rural, you'll have to make it work on 1,000, 2,000 rupees, right? Or less than 5,000 rupees. So how it's going to be viable to onboard such a low ticket size, fulfill, and also Mr. Katpalia said, collect efficiently, right? Because, if you're going to send somebody on his doorstep to collect efficiently, it's not going to happen, right? Because the cost of collection is more than that. So the whole story of, onboarding for a low ticket size credit in large volumes, getting efficient collection systems, I think that will solve. And getting first point is the getting infrastructure available back to the rural locations. I think the three things which I can say can change the game in a long run.
Okay, wonderful discussion. Thank you, gentlemen, for joining me. Always, it's a pleasure talking to you all. Have a great day.
Thank you.
Thank you.
So investing in and mobilizing infrastructure on the ground, creating a seamless digital experience, and adapting to their unique needs, those are the key factors that will drive digital banking into rural India. I thank our panelists and our moderator for that enlightening chat. For our next panel discussion, we look at the very backbone of enabling financial inclusion in India, its internet infrastructure. In the trinity of Digital India's JAM or Jan Dhan Aadhaar mobile initiative, the 3G and 4G telecom boom in the country have been fertile grounds of growth. The correlation between innovation and evolution in consumer tech and the free availability of high-speed internet has been undeniable. And now, as India stands at the cusp of the 5G advent, it is anybody's guess as to how this will change the face of the economy. To shine a light on what role the internet infrastructure will play in financial inclusion going ahead, please welcome our esteemed panel of experts.
Thank you, Abha, for that lovely introduction. I'm really looking forward to today's discussion on the role of fast and reliable internet in financial inclusion with the leaders of the digital payment industry. During the pandemic, we have seen that digital payments was really adopted across age groups and economic strata of the society. In fact, according to reports, by 2025, more than 70% of our financial transactions is expected to happen digitally. However, lack of fiber network, poor network quality, low internet is turning out to be major hurdle in this growth trajectory. So today I wanted to understand from you all what can be done about it, how big is this issue, and how are you all circumventing this issue. So Anand, I'll start with you. And Anand wanted to understand is what we are noticing is in the month of April and May, there has been a dip in digital transactions. However, March was very, very good. What is also interesting is the growth of micro ATMs. Now, typically micro ATMs are used by people who do not have access to the regular ATMs for cash withdrawals. Now, how are you seeing the lack of internet becoming a major hindrance in acceptance of micro ATMs in India, which again is leading to not everybody getting financially included?
Thank you, Devina. My sense is that because of lack of any pattern in the consistency of the data in the recent past, which otherwise you would say that there is a holiday period, there is a college period, there is a vacation, and so on. The current times, I see at least the gaming related transactions, they were put to some controls. So could be the dip is because of that. Having said that, I don't have specific data on how many people do scan and pay versus how many pay online. But for sure, people have got into capital conservation mode. So the splurges that happened at the back of the previous opening of the lockdown and the interim second lockdown, and God knows the third wave coming and hitting, how it will happen. But people have gone into a conservation mode. That said, the digital payments have grossly been already benefited with the times. People have adopted to it easier. The 58 odd crore transaction a month on ATM have come down to half or so is what I read last. So certainly a lot have already migrated onto digital, and that has stabilized. So a rise and then plateau, a small dip, I would not say a reduction to that much extent. But yes, it has plateaued and tapered, be it for a while, but it will again take off at the back of the UPI-led growth that has happened. Third, you asked about the ATM, micro ATM growth and the challenges in the rural. So thankfully, it has evolved tech architecture on the NFS backbone built none other by NPCI. It's a fabulous backup to AEPS for once, I would say. All this while I've been saying AEPS is the backup for ATM. When there is water and ATMs are down under water in flooded area, the protection wave Pramanam, again built by NPCI, is the backbone helping as a BCP. But in certain areas where the connectivity, which Aadhaar package requires little higher bandwidth, micro ATMs on a card swipe and PIN are able to cater to it much more easily on the NFS switch, which is I think on the ISO messaging format. NPCI has been prodding people to also bring AEPS on the ISO format so that connectivity is less warranted, less used. But there is a caveat. While as much as it may grow, there is 115 million debit cards which expired a year before last November 19 because of chip and PIN guidelines. And as much as I would love to grow the micro ATM in the hinterland, 7.5 lakh villages wait this service now. But for the expired cards, if they were recarded, India would grow and propel better.
Interesting points. That 7.5 lakh villages are still in the queue for this facility. Ganesh, coming to you, Airtel Payments Bank has been in operation for about 5 years. You all have got more than 50 million customers. But 300 million, and that's a huge number of Indians, are on feature phone. Now, they use this phone only as a calling device. Now, how much do you see the lack of penetration of smartphone being a big hindrance in this inclusivity that we are all hoping to achieve?
Thanks, Devina. Yeah, you're right. In just about a little under 5 years, we've got more than 50 million customers. We've got approximately 500,000 BC agents across the country. And what's important is more than 2/3 of them are in Tier 4, Tier 5, and Tier 6 villages. So villages with really small population. And we've got approximately 27 to 28 million customers who transact with us every month. The good thing about this, Devina, is that more than 2/3 of them use the assisted mode of doing a transaction. Again, Anand did speak about some of the fabulous products which NPCI has launched, especially things like APS and so on and so forth. And a lot of our customers in rural actually use the BC agents to deposit cash, withdraw cash, even buy financial services products, send money, and so on and so forth, including making payments, in an offline mode. Really, the lack of penetration of smartphone in rural has not really deterred them from doing some of these transactions, because in an assisted mode at a retailer nearby who's a BC agent, who's also a good friend of theirs, they are far more comfortable in engaging with them and having a conversation as compared to walking across to a bank branch which may be 5 to 10 kilometers away, and possibly not feeling as confident about having a conversation as compared to the nearby retailer or the kirana. So to that extent, at least our experience, basis the way in which our growth rates have been over the last several quarters, we haven't seen, that really been a big challenge, for us, because I think customers have gotten used to and are possibly more excited about having a conversation at retail outlets nearby in an assisted mode.
That's interesting. So we in India still need digital transaction, but with a human touch.
Possible.
So
yeah.
That's what we're looking at. Praveena wanted to understand that there was this very interesting project I was reading about, which NPCI is doing on the facial recognition project. And in that, I was studying that it's often seen that fingerprint is not always the best biometric, because many people in the agriculture sector or those in the manual laborers, they often lose the distinctive fingerprint option. And therefore, you're looking at facial recognition. However, internet issues can be a major hurdle for you in this kind of projects, right? Because that is the only way we can move ahead.
Yeah, so that certainly is an interesting pilot that was run. And as you know, APS works on the magical Aadhaar biometric, clearly has been a big game changer, as you heard till now. So while we have seen that single finger biometric, suffers from a certain amount of, success rate impact, there are mechanisms to improve on that using, multiple fingers. So there are solutions taking the fingerprint biometric itself. Facial is one mechanism, but I do tend to agree with, both Anand and Ganesh. So there are other ways to address the requirement of the population that we have to address. One certainly is the assisted mode, and the assisted mode is a great stepping stone to the digital journey. So it doesn't mean that I think forever we will be in the assisted mode. It means that while some of the infrastructural requirements are stabilizing and establishing, while confidence, in the individual to actually do their own transactions is evolving, and the ownership of the right equipment, like the right phones that they need to have, the connectivity they need to possess, etc., falls into play, the assisted mode becomes a big mechanism to bridge this divide, right? The so-called digital divide is not a divide, but it's a divide to be bridged and opens up hence so much more opportunity. One very interesting data point here, I'm digressing a bit, but in a survey we did last year, we realized that close to 25% of people who earlier would actually remove all the cash from their bank account when they get a benefit transfer were actually retaining some money back, which means that they were really getting more confident that when they want to have access to that money, they will be able to quickly walk up, have that assisted service, and gain that access to the funds. So I think there's a improved confidence that is there, that is came out from this survey. Very heartening, which means that we'll move more towards the savings, more towards use of the digital account, and thereafter use on need basis rather than saying let me go take the cash and keep it at home and I'll use it when I need it.
Right. So this again very interesting, because it shows that the hesitancy is reducing, which is very, very important, because it's not like we were also quick to adopt. It took us some time, so why not the others?
That's right.
That's important. Rishi, we were discussing earlier also about internet and the lack of it, or the weak internet, and how it is pushing a lot of people at the periphery of our society to remain there, and they're not being brought in. What are your thoughts on it?
See, in terms of Divana, in terms of the internet availability, I think that was a bigger challenge 4 or 5 years back. But thanks to the work done by the telcos, the internet availability has definitely improved in the last couple of years. It may not, as you go down to tier 4, 5, 6, the availability of internet may have some challenge, but internet is broadly getting available in those areas also. Obviously, it's not as good as urban or metros predominantly. What is important to note is that the 2G and 3G is largely available all across the country, even in remotest parts of the system. 4G is something which is clearly not available in remote rural areas because of maybe the infrastructure requirements and the beefing up of the infrastructure which the telcos have to do to make sure that the availability is always there, the ubiquitous availability as they say. So for a normal banking transactions, the usage is very limited because the data size or the data packets are very small. So we don't see a major challenge on account of that, because of which that the periphery people will not be able to move into transaction platform. As we have seen from other panelists also, everybody has spoken about the fact that assisted model is the right model for as we go down the pyramid, and we go down as well as on the pyramid as well as on the geography part on the tier 4, 5, 6, and that is where the merchant ecosystem plays a very important role in making sure that the customer who's coming is able to transact. And normally they have either they have a data card or they have a broadband connection in their geographies. What is important is that we need to have more stable internet. We need to have internet which can handle larger data packets as such. So as we move up the value chain, right now if we move from just transaction on micro ATM or APS, even like Anand said, in terms of APS, the data packet is a little bit more than the micro ATM per se. So there also we have seen that the droppages are higher, and there is issues in terms of availability of APS. Almost on 100%, it's not available compared to some other banking platform because of the internet issues which could be there. But as we move away from transactions to other platforms like opening an account or doing VKYC, there the data consistency and availability plays a very important role, because if there is a breakage at any point when you're doing a video KYC or opening an account, the customer as well as the process will have to restart it again, and all those cumbersome things which will come up. One thing which is important from an internet and digital point of view is the trust, which I think many people miss out. It's not about smartphones, it's not about internet, it's all about trust of a customer. And in our business, when a customer is giving money or depositing money, the money is leaving his hands. He needs to be sure that the transaction will go through. And to that extent, if there is a breakage of internet, the customer gets into a problem of sorting out where the money has gone, not gone. Whether sometimes we have seen that the amount has got debited,
right,
but the amount has not been handed over because there was some interruption in the internet, and that we see in online transactions also.
Right.
But you can share some data in terms of what is the success ratios and online transactions.
Right. That's crucial point, because it's not just the internet. We shouldn't have internet sporadically. And trust, I think even Praveena had mentioned that slowly, because the trust is coming back, or the trust is developing rather than not coming back, is people are ready to put in some funds, even use it as a bank, than just use it as withdrawal option. Yeah. So this is important. And Anand, again, back to you. When we look at different data reports, states like Maharashtra, Karnataka, then you have Andhra Pradesh, these states have seen people very quick on the digital adoption growth curve. However, places like in Chhattisgarh, the Northeast, Jammu and Kashmir, of course, now these states have been the laggards as far as internet adoption is concerned. What kind of financial exclusion do you see when you look into the states and see, okay, these states have developed, but these states haven't? How much of an internet issue do you see being the main reason?
So it's not of just about lack of internet, because the digital payments in rural areas has crossed the fad of being a fashion. It has become a compulsion now. Yeah. So it is more a consumer driven demand, need, ask, and they are able to find. Thankfully, the UPI operates awesome. That said, there are enough work being done by NPCI and RBI on the feature phone based cohort where one can dial up and on an IVR make payment. And I'm super thrilled that is the next innovation for the bottom of the pyramid. The states that you mentioned, without missing Karnataka too, in the part of those lists which are high on industrialization and hence the connectivity, hence the focus of telecom deployments which have been done in the first round. JNK, the MP Chhattisgarh, they suffer their own connectivity issues. Certainly that does bother. But then there are alternates being built as well, because telecom infra was not built in a year's time. Like UPI took off in a year's time, and there are better alternates which are being created. In fact, the Reserve Bank's permission on doing offline payments by tap and pay up to $200 on a prepaid card is a very clear mindset of the regulator, enabling the rural poor. So what the telecom can't reach in another decade or 5 years, but the technology shall. So I think the connectivity is purely the industrialization led. And thankfully, the gap is being filled by the regulatory intent and the NPCI. I don't know if I call them regulator or a national asset, but that platform is helping build a lot of bridge those gaps.
Right. So there are options which are being adopted because, as you rightly said, telecom services are not built in a year's time. It takes a while. And right now, digital payment or transactions are not just a fashion, but a compulsion. With digital payment not being a fashion, Ganesh, coming to you, with that comes the belief of cyber frauds, internet security issues. Airtel Payments, I know, has been very, very vocal on safe payment methods. Now, there are many senior citizens, I know them also personally, I'm sure all of us know, who are very afraid and hesitant of joining this digital bandwagon. And rightly so, they're afraid about the safety of their money. Now, what can be done as far as internet security is concerned to remove this or reduce this hesitancy?
Yeah, so Devina, you're absolutely right. I think with the significant growth in digital transactions over the last several quarters, I think there is an added awareness or possibly a fear, of some of the, money not being as safe because of cyber security issues and so on and so forth, or cyber threats. I think, the approach which I think we should take is twofold. One, a very, very strong focus on customer education on what to do, what not to do. What are the various ways in which, you should, communicate, especially in terms of simple things like not giving your OTPs and MPINs and so on and so forth. I think that's one strong thread which Airtel Payments Bank at least has taken, over the last several quarters. The second thing really is on product innovation. And you mentioned it. I think SafePay is one such innovation which we came out, I think, 4 months back, which really uses, the network technology of a telco to ensure that, there's a third factor of authentication basis which the transactions are very, very safe. So I think product innovation is going to play a big, big role. And we've also seen that, Devina, that in the first quarter of launch, you've seen almost a 20% reduction in the number of frauds, which have happened on our platform as compared to on a Y-on-Y basis, while the number of transactions have actually grown possibly by almost 2 to 3x. So with a significant surge in transactions, the number of frauds have actually come down, and that's largely led to these two thrust areas. I do believe that all of us need to, spend more time in and invest a lot of our resources behind customer communication and significant product development and innovations, which can actually bring down frauds and cyber threats to as low as possible.
Rightly so. I'm getting a lot of Airtel mails and SMSs on how to ensure safety and security of my payments. You're right, because an interesting point is, along with the increase in digital transactions, the fraud actually is coming down, and that's good news. Praveena, the Aadhaar-enabled payment system has been very, very important in the sending the government's direct benefits transfer to people in the rural areas or those who are, in the lower order of economy. But there are also reports of transaction failures. In certain geographies, it's above 40%. Now, is it solely because of the internet issues? How do you see it, and how much of a role does internet play in this?
So I think there are two parts to this, right? One is some element of the last mile service connectivity. Internet could play a role in certain locations there. I don't have the data for that. The biometric accuracy that we spoke about earlier.
Right.
And, last year when we had the kind of high peak in the midst of the pandemic and, benefits were really getting deployed, there was a question of also the infrastructure really, catching up with the kind of volumes that had to be supported. So I think the entire ecosystem did a phenomenal job in about a month and a half. Everyone had added more servers, more networks, you know how it works, right? So at least the supply side, was ready and is ready. Flows have been redesigned. So, between NPCI, UDAI, who really runs the Aadhaar authentication, the banks like, Fino or Airtel, business correspondents like Pay Nearby. So I think the entire, the flow, efficiency of the flow was reviewed. The flows were revised to be, more efficient so that it calls for a fewer number of steps in the process. So I think number of actions have taken. And I will say that we are actually in a very good place when it comes to the success rate that we see from as a central agency.
Right.
But I'm sure that, Anand will still say that, people who walk up to the BC point, right, the business correspondent point, the help that the citizen goes to, there will be a certain percentage of transactions that are failing there. So we have some way to go. And I think the topic of getting connectivity right is very important there. And, he did talk about offline. And I want to mention that because I think as we move forward in India, it's going to be very important for us to solve things using multiple mechanisms, right? So we've got the online, I want to make a transaction. It operates immediately, digital, instant. But when that connectivity is not available, we need to be able to operate in an offline mode. And we do that with tolls nowadays, right? So you see tolls, we have nearly 800 tolls across the country that are enabled on NATC FASTag. And some of them are not directly connected because of the remote locations that they are in. So it's a mechanism called offline. So, the transactions are held and then on a periodic basis, they are then transferred back to the servers. So you kind of so these are compensatory, design elements that one can bring in. So we'll have to build these redundancies in so that, overall, through various mechanisms, we are able to deliver that service to the citizen.
Right. So work in progress, definitely, but hoping for much lower transaction failures, which should be the case very soon. Rishi, finally, we were discussing earlier as well on, like you mentioned, about the small and medium scale businesses. If I take the attention away from just individual customers and smaller and medium scale businesses, how they are trying to join the digital bandwagon. How much is, again, poor internet connectivity, sporadic network, how much of this is becoming the major issue in not having more of these small companies join the digital payment system?
So, Divana, we work with a lot of merchants across the country, from tier our metros to going up to tier 5, tier 6. And all of these merchants have to have internet, and without internet, there is no way banking transactions can be enabled as such. So what I would say is that over the years, what the merchant ecosystem has done, they have taken 2-3 options which could be possible. One is they could have a broadband connection if there is a broadband availability in that region, or they would have a data card. Most of the telcos now are issuing data cards. So under multiple options, they have taken up those devices to ensure that the internet connections are not disrupted. But having said that, I still feel that internet availability is still not ubiquitous, and we need to make sure that the packets can handle, or the data can handle higher size of packets, as I said earlier. So to that extent, I think the merchants and the ecosystem which is there has coped quite well in adjusting to the internet availability. In fact, if you see the usage on social media is quite high, and they consume a lot of data, whether you look at Facebook, YouTube, or other kind of social media availabilities which are there. So the internet, I don't see will be a bigger challenge in the years to come with 4G now coming and making available in the tier 4, 5, 6 as well in some time to come. I think the bigger issue is the trust factor, that even availability of internet will people of that nature, SMEs and merchants, will move to a digital platform, because they always fear that if there is a breakage in the transaction, how do we resolve it? And that is where customer grievances, ombudsmen, and all that play a very, very critical role. So I think internet and trust go hand in hand to my mind. The bigger challenge is that we have to give the people the comfort that if there is internet connection which is there, it will continue to be robust and will not break in between. So that is my answer to this.
True, important point, because that means if the transaction is not stable, they also have the customers to face on the other side, which could be a deterrent. Paucity of time, I just have one question which is common for all of you all, and I'm going to ask you all individually. 2 ways in which you think the telcos, the government, the internet service providers, or the fiber companies need to work on right now on a priority basis to ensure that segments of the society are not excluded because of lack of internet. The usual way, I'll start with Anand first.
All right. Rome was not built in a day, madam. And there will always remain 2 more things to be done. Even if I say more connectivity, but take stock of what has been built already. A platform like NPCI, the connectivities with banks, customer education, grievance redressal mechanism, simplifications, policies, whatnot. Already lot has been done. And one more thing, if one has to really ask for wishes or horses, the connectivity would really go down well at this time. I don't know what the second thing would be at this stage. But fantastic regulatory mindset is already in the work to allow the unconnected, secluded segment and the digital divide to be bridged. So that is already in work. So I think connectivity would be one single ask. I'll double my bet there.
I'll take one. That's fine. Ganesh, from your side.
Yeah, so Devina, I have a slightly different view. I think Rishi mentioned that over the last several quarters, we've seen exponential growth in internet penetration and consumption. I think the focuses should be more on us, banks, financial institutions, fintech players, to innovate products in a manner in which low-income consumers on a feature phone or on a low-end smartphone can actually use digital transactions. USSD is one media which I don't think any one of us has done a good enough job of ensuring that the flows are such that customers can actually do transactions on USSD. Secondly, voice-based payments is another key way in which you could actually get some of these transactions done. And third, possibly a UPI for a feature phone could be 3 innovations, and I possibly have made up one for what Anand didn't use. So these are possibly 3 solutions which I would like all of us to focus on to build on the already growing penetration of mobile internet.
Right, law of averages. We already have 4 points. Praveena, 2 points from you.
Okay, so of course I agree with Anand and Ganesh, and I'll add one from my side. I think we need to build redundancy into the networks and connectivity. We saw it even during recent storms that have happened, during the monsoon or pre-monsoon. So they could be fiber connectivity, mobile towers, satellite connectivity, and I think we need redundancy here. So if something fails, there should be another form of connectivity that steps in and plays a role. And this is going to be very important in a country like India. We cannot have a situation in any case where a part of the country is not connected.
Right. So that's 1 point from Praveena. And Rishi, now we need at least 3 points from you.
No, I would say, I think most of being one of the last speakers, you have the advantage that most of the points are already covered by now. But what I would say is that in India, if you look at the biggest problem with regard to digitization is that 70% of the Indians get paid in cash. So that is something which I would look at, that if we can have a system which is more robust and there is an ecosystem of digital play and digital tools which are available in tier 3, 4, 5, which can make sure that the person gets the money in digital form, or is the cash is digitized into a digital form, and he can use that into buying whatever he wants to do with that money or transfer money. So that is one area which I think we need to all work on, is in terms of ensuring that the cash is digitized. I think Nandan report also of 2019 talks about Kiko, and something which Pravina was also mentioning about the safety or this or the factor that wherever you will go, you'll be able to withdraw money, and 25% of the people are not withdrawing money from the DBT platform. Goes to show that the people are happy to give the money in digital forms. What we need to build is the tools where they can use that digital form. Another thing which I think where the government can really build on this is that government has put a lot of schemes on the CSC platform. CSC, which are about more than 2 lakh CSCs across the country, but we have more than 10 lakh BCs across the country. If the same platform which is available to CSC, or the government schemes which are available on CSC platform, the same can be made available on the BC platform also, will mean that the usage of the BC network, the availability as well as the easiness or the convenience to customer can grow manifold. So I think these are the two broad things. I think BharatNet is something which the government is already focusing on and making broadband available. So I would say those are 2-3 broad things. But Devana, in terms of where we were, we have seen in Fino last 15 years, one of our big challenge was the internet. I think a large part of thanks to all the telcos who have done wonderful job in and NPCI and regulator helping the entire ecosystem in using that connectivity. I think we are in a different world altogether. We need to focus a little bit more on customer education and building that trust with the customer, that even if your digital transaction fails, there is somebody who is hearing you and your problems will be sorted. I think that's a broadly, if we really want to be really successful on financial inclusion.
That was a lovely ending note, because that's important, because if there is someone who is listening to us, that automatically builds in a lot of trust in all of us. Thank you so much for being part of this panel. And I'm sure the listeners, the viewers, I learned a lot in, finding out what the troubles are, what the hurdles are, and how different options are being figured out by all of you all in trying to ensure that every part of Indian society gets included in digital payments ahead. Thank you so much. And thank you to our viewers as well who have joined us virtually. I hope it was an interesting discussion for them as well. Thank you so much again.
Thank you, everybody.
Thank you.
Thank you.
Thank you.
The importance of building trust at the last mile of our internet infrastructure, alongside on-ground innovation, that seems to have been the theme of this panel discussion. My thanks to all our panelists for that wonderful discussion. And now for what promises to be a truly informative fireside chat. The last 6 years have already witnessed the successes of the Digital India Initiative in expanding the scope of financial inclusion in the country. The way the country has taken to digital transactions, driven by a combination of foundational digital public infrastructure in UPI and the JAM Trinity, is a story in itself. But the real challenge going ahead will be in bringing the last of India's most underprivileged populace into the ambit of these financial successes and supercharge their progress, allowing them to borrow, invest, and build on their assets and achieve true financial inclusivity in the country. So what does the blueprint for the road ahead look like? To educate us on the subject from a policy perspective, please join me in welcoming Debashish Panda, Secretary, Department of Financial Services.
Thank you, Abha. We have with us a very special guest today, Financial Services Secretary Debashish Panda. And we would be discussing financial inclusion, the state of affairs in financial inclusion. We know that government brought out and implemented a massive scheme of Jan Dhan accounts in a mission mode. And it was ensured that every household in the country has a bank account. Mr. Panda, thank you so much for joining us and taking out time. If I could just ask you, begin with, we started with Jandhan in a big way. Where are we right now at this juncture? Because there still is a concern that we have not been able to reach every household or every individual in that sense.
So if you permit me, I'll just put the context, so that for your listener, viewers and your audience, it could provide the clarity. See, the financial inclusion program in India has achieved phenomenal success, and it has been, acclaimed worldwide. So what was the essence or the basic tenets of the financial inclusion in India? It was basically to begin with the banking the unbanked, securing the unsecured, and funding the unfunded. So these are the three pillars on which the financial inclusion program was built. And the foundation was laid not very long ago in 2015. And in 2021, the numbers are astounding. As you rightly pointed out, the number of Jan Dhan accounts today stand at more than 42 crores. The deposits, which all began with a zero account, today the amount which is lying as deposits of these individuals is about 1,44,000 crores. And the number of women beneficiaries, that is an important point to note, is around 23.5 crores, which is more than 55% of the total Jan Dhan accounts. And also let me add that the number of beneficiaries in the rural and the semi-urban areas are close to 29 crores and accounts for 66% of the accounts. And alongside, the RuPay card was also provided so that people could transact in the digital mode, and more than 31 crore RuPay cards have been issued. So this is the first achievement in terms of opening of accounts. And as you rightly pointed out, the initial target was to saturate every household, which has happened. Thereafter, we moved towards saturating every adult. That has also happened to a large extent. There are certain pockets where there is a little shortfall and work is in progress, particularly like the aspirational districts program. And then now we are also identifying the districts which are not matching with the national average. So we are raising the bar time and again. So that effort is on. And then similarly for securing the unsecured, two flagship programs, basically to provide low cost insurance product, which is the Jeevan Jyoti Bima Yojana and the Pradhan Mantri Suraksha Bima Yojana. Again, there we have a cumulative enrollment of more than 23 crores. And the number of claims which have been received, that is also phenomenal, more than 9,900 crores one scheme and about more than 3,000 crores in the other scheme. So that is the kind of, people have been benefited from these programs also. So then the third pillar, what was third pillar? The most important one is then to move from, financial inclusion to financial empowerment. So there comes the Pradhan Mantri Mudra Yojana, where essentially banking the unbanked. What has it done? It has done a tremendous job in the last 5 to 6 years. Total number of loan accounts which have been opened are more than 30 crores. The number of women which account for out of this is more than 20 crores. The total amount which have been sanctioned till date is about close to 16 lakh crores. And the total disbursed amount is more than 15 lakh crores. So what has it done? It has provided livelihood. It has provided an income generating activity. People could source this loan without any collateral, and and with ease they have been able to access this loan. So they have become self-employed, and in the process you would be also happy to hear that large number of units or these micro units have also employed people. Like you have a beauty parlor, so they have employed 2 or 3 people there. So it is actually a game changer. So I think the 3 pillars actually then has created a digital pipeline, the Jan Dhan account, the Aadhaar and the mobile, through which there is a regular flow of benefits from one side to another and also services from the customer side to the banks. So I think all in all, the journey has been wonderful. But we are now looking forward how to raise it further, take it to the next higher level.
So what would be in the next level? And also, one of the concerns has been that while, we are ensuring that payments and bank accounts reach to the last mile, but on the credit side, there still seems to be some issue. You mentioned about Mudra. Mudra, definitely there is a push towards credit from there, but still, in terms of the reach of the credit, it's still not reaching, particularly the rural hinterland.
You see, apart from the overall umbrella of Mudra, there are also carve-outs. Like, for example, if you are aware, we have a Pradhan Mantri Swanidhi Yojana, which is essentially aiming at the street vendors. And there we are trying to also digitally onboard the street vendors. They are the ones who have been registered with the urban local bodies, so that you know their whereabouts, they know that they are vending in a vending zone within that city or that town, and trying to provide a credit again which is backed by a guarantee from the government, giving the banks the comfort to lend because the risk weight comes down, and also providing a good amount of interest subvention, interest subsidy, and thereby making the loan repayable. So that is also happening, and I'm also happy to inform you that more than 25 lakhs have been sanctioned. This program started during the pandemic last year, I think in the month of May, and it's not been long. We've already covered 25 lakhs of sanction, and more than 22 lakhs of disbursement has happened, and pretty good experience. And we are trying to now expand our outreach to other big municipal areas and corporations. So that is. Then secondly, there is a targeted program called the Stand Up India, which essentially aims at providing the credit facilities to the women and also to the SC/ST category. So that is again another targeted one. Then there are various such carve-outs and specific programs run by different departments. You have the self-help groups, then you have the joint liability group. So the entire ecosystem actually has been built now. As I said, the JAM Trinity and the Pradhan Mantri Jan Dhan Yojana, thereby people are actually, and in fact, the digital transactions have also grown in large numbers. Now, what exactly are we doing? Now, what we are doing is we are trying to bring more new to credit micro enterprises into the formal banking channel. Now, how can we do that? We are taking the help of fintechs. Now, there are a lot of fintech players all around with new technology, innovative technology. They are trying to connect alternate data points. If I don't have a credit history, but I have a spending history, right? I purchase, I sell. So they collect those data, do an analysis, use technology, and build the dossier for that particular individual, which then becomes comfort for the banks to lend. So fintechs, and we have been asking the banks, or rather requesting them, that why don't you partner with the fintechs, deploy fintech wherever and these fintechs actually operate in different ecosystems in different geographies, therefore carving out innovative solutions for that particular segment or for that particular geography. So we are rather fortunate that these kind of technologies are fast evolving, developing, and banks, insurance companies are embracing, and they are being nudged also, and they see value there. So that is the new step that we are actually embarking upon. And apart from that, recently RBI has come up with a co-lending guidelines, wherein the MFIs are the institutions who actually have the connect with the last mile borrower. So they work in that small ecosystem. They know the footprint of that particular borrower, and they have the comfort of actually providing them doorstep services also, meaning they deliver the loan at his doorstep, collect the money from their doorstep towards the payment of installments. So banks are now tying up with this new arrangement provided by the central bank and providing the credit to the MFIs through a arrangement between the two, where the interest gets blended, so it comes down also for the end borrower, and money is flowing, the credit flowing into the rural. That's also something we're working on very, very earnestly and very sincerely on that.
I'm glad you mentioned about the role of fintech in terms of marrying the services that the government is offering, going beyond like the payment systems or digital payments. what kind of a larger role do you see for fintechs, and would it also require like changes in terms of policy or regulations per se?
You see, the RBI and the IRDA, which is the regulator for the insurance sector, both have provided a sandbox kind of an arrangement where, you know, these new fintechs or insurtech solutions, they can go and try it and test it on the ground. And then once the proof of concept, etc., is you know, established, then they can straight away you know, get the license and other kinds of stuff so that they can carry their endeavor forward. So that gives the comfort to the fintechs, and so that regulatory arrangement is already there for them to operate in this ecosystem. Now, how do we also encourage them? The encouragement will come if the banks, the other financial institutions, the NBFCs, the MFIs, they partner with these fintechs. So they all see value in it, because what I'm supposed to do, they are doing it for me. And if a customer is there, he needs money, and they come to me with his dossier saying that, look, these are his alternate credit data points, makes him credit worthy. So why don't you lend? So then I get the comfort of lending. If I were the bank, I'll say yes, straight away, yes, I'll sign on the paper. So that's how we are trying to get as many as fintechs as possible, partner with them, rather than, you know, trying to the banks themselves come up with the new technology, because they're trying and also testing, and some of them are tried and tested. So we could straight away onboard them and take this whole process forward.
So in terms of financial inclusion, you know, one of the deterrents has been, which we've seen, is, you know, access to the nearest banking point. So how is the government looking to address this?
See, today, let me also tell you, maybe many of you are not aware, today the banking network has really expanded in a big way. Apart from your bank branches, which are the brick and mortar branches, you have ATMs. There's a huge proliferation of ATMs across the country. But more importantly, we have the banking correspondent. This is a new concept which people know in the rural areas, in the hinterland, as Bank Mitra. So they are the ones who actually deliver, again, home doorstep services. The banking correspondent is a person who has a micro ATM with him or with her, and provides the services of opening of accounts, to remitting, to transfer of accounts, to withdrawing money, and updating the passbook. And even now the banking correspondent's bouquet of services are being expanded. They are doing some kind of insurance product, also selling of insurance product. They are also providing the loan leads to the banks. Say, for example, in the ecosystem that he or she is operating, then somebody says, yeah, I want a loan, I want to start something. So he carries that lead and provides it to the nearest branch with which he works with. So that is another huge a big touch point, and they're all around. So what has happened, and the proof of it is that we have a GIS based application now titled the Jan Darshak app. In this Jan Darshak app, which was launched a couple of years ago, more than 1.68 lakh branches, 3.18 lakh banking correspondents, 2.10 lakh ATMs, and 1.37 lakh post-payment bank centers have all been mapped in this app. So what we have tried to do is we have tried to take care that from any inhabited village within a radius of 5 kilometers, there is an availability of a banking touch point, which could be a branch, brick and mortar branch, or ATM, or the IPPB touch point, or the banking correspondent.
So, you know, one of the thrust areas for the government has been on the digital payments, and you also mentioned how that has really helped, the RuPay card. So it has reached, you know, the last mile, if we can say. But one crucial issue has been of the MDR. Now we know even the, you know, Nandan Nilekani panel had said that, you know, there are costs associated with digital accounts or digital transactions, and someone has to bear it. So what is the government's thinking on this?
See, I would put it this way, that different models of cost mitigation work for different groups of persons. Some products are targeted to the bottom of the pyramid, so those people who live in the, and so therefore there's a need for also subsidizing or cross subsidizing also. So what we are trying to do is to provide the the digital penetration in a manner that we reach the last mile, and the ones who don't use it the most, right? So in that effort, yes, the FDR is a case in point. However, I think the government, the last budget, have already made a provision of 1,500 crore of rupees as a provision to compensate or offset that expenditure that they incur for maintaining various services. But there are a large number of services which are provided free of cost. For example, all the Jan Dhan and the BSBD account, which we call the terminology, they are all offered free of cost. There is no transaction cost at all. Similarly, the RuPay cards have been also provided free of cost. So people can transact through the RuPay cards. And the RuPay card also has an added incentive of a free accident cover of 2 lakhs of rupees. So that should actually encourage people to use the digital means. And if you look at the growth and digital transactions, again, phenomenal. And more so during the pandemic, the use has gone up. And just for your information, in 2021 alone, more than 22 crore UPI transactions have happened for a value exceeding 41 lakh crores. So that is an astounding figure. And we are very pleased to see that happening in our country. And gradually we are moving towards that. And the UPI platform actually has transformed. And a lot of countries are actually coming and trying to learn from our experience so that they could actually replicate it in those countries. So that's the success we have achieved. But we are not stopping there. We are now moving towards the next generation UPI, and a lot of other new things. Whole lot of things are going on, and we'll unveil them as and when we, complete those activities.
Sir, you mentioned about the pandemic. How has been the experience during the pandemic? I mean, in terms of financial inclusion, how did it really aid the government to reach out to people, and how did the program really function during the pandemic?
So it's there's a saying that the proof of the pudding is in its eating. So the financial inclusion actually was tried and tested in terms of the scale and volumes during the pandemic. So if you could recall, then we transferred about 1,500 rupees to more than 20 crore women, Pradhan Mantri Jan Dhan account holders. So the monies were put into their account in the morning, and evening they could withdraw that money. So that's the success that we achieved, and within no time we could transfer this money into the accounts of these who actually needed it during the pandemic when there was a lockdown. Today, more than 6 crore farmers, the PM Kisan Yojana, they are again the same. You transfer the money in the morning, and that same evening, T+0, the money is there in their accounts. So a variety of DBTs, whether it's scholarships or whether it is the various welfare schemes for women and child, all gets transferred through the DBT, this channel, and the Jan Trinity and the Jan Dhan account has been a boon, or our financial inclusion program has been the boon. So, and now a variety of other government, like the LPG, or for that matter, food grains, the one ration, one car, everything all will fall in place with this, this digital pipeline that has been created. And it actually, what happens at the end, the right kind of, the deserving person gets the money, and there is no pilferage, no leakage, straight away money. And so there is so much of efficiency into the system. Otherwise, hundreds of people were engaged in preparing those sheets of paper, challans to the bank. So it's all over now. It's all behind us. And thanks to the vision of our Honorable Prime Minister, that he thought so in 2015, and today it is a reality. And during the pandemic, we used it to the fullest.
If I could just wind up, we had a huge success with, Jan Dhan accounts. It was launched in the mission mode. Now, is there anything on that count being planned to sort of really take financial inclusion now to the next level? You did mention in the beginning that there are some initiatives which are being proposed. If you could just sort of elaborate on that.
You see, we are trying to power India to, it's an emerging economy. We want to move towards a $5 trillion and even much more than that. So unless we take this population above that threshold, obviously we'll be left behind. So as I said, various efforts are on, and we will continue. We are working on it continuously, and new ideas, new thoughts, and with more and more investments coming into India, then there will be much more economic activity. So people will find more value being added to the services that they are providing. So I see that we are definitely heading towards that new India that we are dreaming of, where it will be digital, where you will have great infrastructure in place, and people having better standard of life, and children going to school and the best colleges and universities. So all that is happening. I think we are very quickly transiting towards that.
Thank you so much for joining us, Mr. Panda, and thank you for taking out time to sort of inform us about what is happening from the government side on the financial inclusion. Thank you so much.
Thank you. Thank you.
I think that was a fantastic conversation and offered such an immense amount of insight on the path that policy might take going ahead on India's road to financial inclusion. I thank you, Mr. Panda, for taking this time out to address us. FinTech, is it a revolution or a disruption? That's one of the questions we might find ourselves grappling with in the next panel discussion here at the Economic Times Financial Inclusion Summit. There is no doubt that emerging technologies and FinTech have changed the face of banking in the country, allowing millions of Indians unprecedented access to financial services like never before. At the same time, with the development of online marketplaces, fleet-footed FinTech startups have gained the first-mover advantage in the non-banking online payment solution space, resisting the monopolization of legacy financial institutions. The road ahead now offers both banks with their industry expertise and ready infrastructure, and FinTech firms with their agility and expertise in the deployment of new technologies, opportunities for competition, as well as collaboration. Where does the best bet lie? The answers, we hope, lie with our panel of industry experts.
Thank you so much for that introduction. A very warm welcome to all of you. It's my pleasure to sort of have this very eclectic, eminent set of panelists, of experts, if I may, to deliberate on the topics which are relevant not just from an Indian context, but from a global BFSI sort of context. As the lines between traditional banking services and new age financial intermediary services sort of blur. And in the intersection of technology and finance, new age startups, right? New age fintechs are born. It's becoming more and more apparent that banks, they need to sort of reinvent themselves or redefine themselves to be sort of more aligned towards, the progress that's happening in the technology sector as well. And faced with this, there are a few interesting conundrums that sort of banks need to solve, few challenges that banks need to solve. And these are very basic in nature as well. I mean, what exactly are fintech? How do regulators sort of look at fintech? And do banks themselves need to sort of consider, or evolve into fintech companies in the future in order to service their customers better? Or, I mean, are there larger synergies, right? Larger collaborations which can be explored in this space, in this dynamics, which can help the larger cause of financial inclusion? These are some of the questions we'll try to answer, some of the questions where we can sort of get clarity, and without wasting much more time, I'll dive straight into it. So Anjani, we'll come to you first. We know that HDFC Bank is the largest retail bank in India. And it must have occurred to you, when this entire scene landscape was first emerging with fintech sort of coming into play, that these entities could present a competition sort of challenge for traditional institutions such as yours. But as part of the question, I also want to understand like how these conversations over the last 5 years, last 10 years have evolved now with the banks seeing fintech entities more as more for their collaborative synergies, and how exactly have these conversations sort of shifted and evolved over these years, if you could shed some light.
Thank you, Ashwin, for that opening question. I think this is a very, very good question, very insightful question. Over the last few years, we've seen a significant shift in the way we have been partnering with fintechs or technology companies. Earlier it used to be just about getting technology and running banking yourself. But over a period of last few years, it has also become more like co-creation. So a lot of co-creation is happening along with fintechs. Fintechs are challenging the envelope, the boundaries available today. Also, given what is available, how do you extract the best out of it? There's a lot of optimization which is happening in the ecosystem. So it has become a lot more collaborative and co-creation. The other shift which has happened is that largely technology was earlier at the back end, and most of the front end was, very human-led, very human-intensive. And that has now changed to technologies also being a big differentiator at the front end, at the engagement with the customer. And that's again another area where a lot of collaboration is happening with technology companies or fintechs to make that lot more seamless, much more contextual for our customers. Apart from that, banking is no more about just getting inside a bank branch and doing banking. It's now present everywhere. You don't get up in the morning to say, I want to go to a bank. You actually go and do something which is valuable to your lifestyle. And that is where now banks have to be present. And that's another area where a lot of partnerships and technology collaborations are happening. So there are some significant shifts that have happened over the last few years.
So Harshal, I'll come to you here. Razorpay, you all became a unicorn recently. And what you guys have done over the past 2 years is quite commendable, be it being at the forefront of payment-led innovation. And now, since last year, you've been scaling this business of challenger banks, neobanks, as it is called in many global markets, including UK and Singapore. Neobanks in India, they are not recognized under any regulator. RBI is yet to define neobanks. So I just want to understand from you, Harshal, for neobanking entities in India, how exactly do you envisage neobanks to sort of fit into the banking landscape in India? One, and second, how do you think Reserve Bank of India can regulate these entities in a better, more meaningful?
Thanks, Ashwin. I think it's a very valid question. And a lot of people have this question whenever somebody talks about neo-banking, right? Like, what does it essentially mean and where do the boundaries lie, right? I think neo-banking is definitely a global trend right now, where a lot of the newest tech companies are coming and saying that there are certain things that we can do better or differently than what banks can do. I think in Indian context, what is essential to qualify is, I think neo-banking is basically and companies like ours are not basically trying to say that, okay, we'll change the way banking is done, or we'll build a different type of bank or something like that. They're saying that a certain segment of customers who need banking in a very different form, and the universal approach to banking that most banks have to adopt because of regulatory reasons, as well as to serve the large market, isn't probably the most tailor-made approach for certain segments. So can we come in, work with the banks, and create this tailor-made platform or product for the certain segment of customers who need a different kind of approach to banking than what is traditionally available in a one-size-fits-all approach? And we typically work with other banks. We have a deep partnership, for example, with RBL. We have a partnership with HDFC. We work closely with MasterCard and other folks on this panel. And we basically say that, okay, we will build the interfacing and the product layer for a specific segment of customers. And in our case, that is high growth tech startups and young companies. There are certain neobanks targeting other segments of the market. And for that segment of the market in particular, we'll build better interfaces, better products, more customized services and offerings that allow them to do banking in a far more seamless and more agile way than what they can do with just with a traditional standalone banking experience. And I think that is a new trend in the Indian market. So certain segments will adopt it well, and I think we'll see a lot of growth coming out of that. A lot of segments might not need all of this as well. And for them, traditional banking is actually the right approach. Coming to the question on the regulatory side on how it should be perceived, I think that's a more complex question, and I think it's a little too early to answer. Right now, I think if we too early try to put in regulation in this and try to draw boundaries in this, I think it might even stifle innovation significantly. For example, in wallets world, we didn't have regulation for a long time, and then once it started seeing significant scale, then RBI came up with the PPI guidelines and stuff, which stabilized the ecosystem to some extent. I think we'll see similar approach, at least in my opinion, we should see similar approach in neobanking. I think right now, most companies who are doing neobanking in various ways are still fairly small compared to traditional banking.
Absolutely. Great point. From RBL Bank, Rajiv, the market has been set for the credit to flow. In your synergies, in your collaboration with fintech companies, right, over the last 12 months, 15 months, how do you think these partnerships have helped you disperse this credit in a better way, more meaningful way?
Thanks, Ashwin. The pandemic has been extremely traumatizing from the health and the macro perspective. But one area where it certainly pushed adoption is the adoption of financial services through technology-driven channels. The expansion of this market means you can't expand it yourself. You can't reach that customer. We certainly believe that, I don't think Harshil is no longer a startup. He's as scaled up as anybody else. And there are many more like Razorpay. So there is a need for us to connect via them. And we've always believed in RBL that coming 20 years behind the larger retail banks, we cannot recreate the distribution or the connect, which these banks have very admirably done starting early 90s. So we have to connect with people who have a very specific focus on a customer segment. They understand the demand far better than we would. And we are to be humble about it. And that's exactly our philosophy of banking as a service for the last 7 years, because we're not going to be able to do it all the business ourselves. And I think outreach to these partners, and now many of these partners are not just in the traditional part of digital India. They're expanding into MSMEs, expanding into semi-urban, rural, and you'll be surprised at even in financial inclusion, the rate of adoption of digital payments by customers is moving from 5% to 10 to 20% because necessity is the mother of adopting these services. So it leads to better availability, faster access, and more economic access. You imagine if I have to put branches and physical people and feet on street for every niche customer segment, it'll be very, very expensive. I mean, at least I can still be expensive for us. But with some partners, I can reach out and do this. So they do the heavy lifting in the front end. I'll do the heavy lifting in the infrastructure and processing. And maybe together, as Anjali said, we'll co-create many services. And we've seen in the last 7 years, it's happening dramatically.
I'll quickly go to Rajiv from MasterCard. MasterCard, the OG sort of fintech, I mean, globally, so to say, and one of the most valuable financial institutions in the world. You came to India, I mean, when MasterCard came to India, it was already an established sort of financial services fintech, I mean, player in many markets, right? And you came here with all that perspective, MasterCard. And even now, as you sort of, as we've seen digital payments sort of scale in India, and fintech ecosystem in India itself scale. I mean, I'm sure you're able to draw from perspective from a lot of other markets to sort of gauge this, to understand this space a lot clearer. So my question to you, Rajiv, is, what are the learnings India can really take from some of the more advanced, more mature fintech markets of the world, right? And sort of create more meaningful collaborations with the financial institutions, legacy institutions that are existing in this market.
Thanks, Ashwin. A clarification, we have been in India for the last 40 years, and we've been one of the first payment networks to issue debit cards, credit cards, and we have seen this market grow to where it is today. Yeah. We are very proud of it. Coming to the partnership of fintechs and banks, what I'm really glad to inform you is that we here in India are perhaps one of the top 3 pioneers globally. In fact, there's not a single day that goes by in my world when somebody in Asia Pacific or in Europe or in the US is asking us as to how we have achieved some of the breakthroughs which were brought about between fintechs and banks. So just to give you an idea on what we do in this space, over the years, we found out that we do have gaps in our product and solutions, and the same with our banking partners who are our primary partners.
Yeah.
And through our engagement, as Rajiv and Anjani mentioned, there are certain pain points that the banks have, which we understood. And what we did through that process of understanding these gaps in product, services, and pain points is to come up with a platform called StartPath. This is primarily a platform where we bring the fintechs like Razorpay and our own product teams and the banks on this platform to build what is necessary out there in the market. So we co-create the solutions, products, or to solve for pain points that we have learned in the market. So just to give you an idea, across the world, we have worked with over 250 fintechs. And here in India itself, we have worked with dozens. One of the largest fintech partnerships we have, StartPath programs we have across the world. We have companies like Razorpay, SignZ, Paycraft, Zeta, Citizen, HapPay, ToneTag, and a number of others in whom we invested at very early stages. I think in Razorpay, we invested 5 years ago, and they were very, very small. Today, what you'll be pleased to know is that these companies that we have invested in have collectively in India have raised $3 billion after our investment. So they've all become unicorns. One of the best examples is in front of us. So apart from the StartPath program, where we incubate, work very closely with the fintech, build the product solutions, and then take it to the banks, we also invest in other fintechs, not under the aegis of a StartPath, but separately, sometimes very large investment. And one of the examples is what we've done with Pine Labs, where we have invested a pretty large sum. So to bring this to life, I would like to give an example. And the best examples are sitting here, right here in front of me. With HDFC Bank, for instance, we have taken a partner, fintech partner called Paycraft, with whom we, along with HDFC Bank, are powering a transit ecosystem in India. And the reason for that is this particular fintech partner of ours is a specialist in automatic fare collection. It's a very, very unique space. Not many payment service providers and partners of ours had that solution. We identified this partner and built the kind of solution that a typical transit would require in partnership with a bank like HDFC Bank. Is one example. And the other example, a very, very successful one at that, and very proud of that, is with RBL Bank. And you'll be pleased to note, RBL Bank is the fastest growing acquiring bank in India and in South Asia. And one of the reasons for that is because we introduced a number of fintech partners and payment facilitators to RBL Bank. So together with RBL Bank, MasterCard, what we have done is to take our MasterCard acquiring solutions where we put a point of sale machine or a QR or online acceptance enablement. We have enabled millions of merchants, MSMEs mostly at that, in tier 3 and 6 locations with a partner like RBL Bank. And the last example, which is the latest one, which is on everybody's mind, is thanks to a RBI mandate which came out recently about recurring payments mandate, which needs to be enabled by all the banks before September of this year. So we realized the opportunity and the pain and the potential to take a solution together. So together with Razorpay, we built a recurring payment state-of-the-art platform, which we are taking to all the banks so that they don't have to in-house build this platform on their own before the deadline and implement it. So we built this solution and we're taking to all the banks. So 3 examples to bring to life as to how we are bringing the fintechs and the banks together to solve for problems out there.
Absolutely. Some great examples there. So Rajiv, I'll come to you on this question pertaining to how startups and fintechs especially have really approached funding in this environment. We've seen that even as they're working very closely with banks, with financial institutions, in order to access capital, the major avenue for a lot of smaller fintechs is to approach venture capitalists, approach private equity companies, corporates elsewhere. It's seldom that banks are sort of cutting the big checks. So Rajiv, I just want to understand what could be the reasons. I mean, banks have consciously stayed away from investing in the sector. Even debt funding, barring certain NBFCs which have scaled to a certain extent, we have not seen any big sort of debt deals also sort of take place.
Ashwin, the funding from various sources is really relevant from what stage the startup is at. So, in the very early days, you need high risk and very patient capital, which a venture capital does provide. Sometimes, MasterCard and even banks take stakes where they feel that an investment at that stage can take it, it's more strategic. And I think after that is really a function of, we try to actually be agnostic, saying, we can work with many, but at the end of the day, startups need a variety of funding sources and principally equity. Having said that, we have a very dedicated unit within the bank which works with startups of all kinds to actually look at debt solutions, working capital solutions for them. We have an investment and a kind of a sponsor position in a venture debt company. Some of these things we cannot do on our own balance sheet for venture debt, which actually provide venture debt to a lot of startups, including fintech. Lending fintechs is where we actually do a lot more collaboration on balance sheet or co-lending with some risk diffusion both ways. So the bank participation works at many levels and not just equity. I think it has to be broad-based, both at working capital, term lending, where it's appropriate, or where we believe that, like I was mentioning, there are segments where we cannot reach directly. I can actually be a lender to that lending fintech on its balance sheet, and then pick up co-lending opportunities once we season each other's relationship and process of working. So we've done a lot of that. I mean, we have now a full startup funding unit, which has about 70 to 80 startups where we have some level of exposure as a normal bank would, and that keeps increasing almost every month.
Harshal, I'll quickly sort of come to you. We have seen, like in the life, be it insurance, where we have seen startups like Digit and Acco sort of establish their presence. Now we are seeing BharatPay for one, then probably Paytm is also, moving in that direction, it seems. Do you think this will be the step for a lot of startups? I know previously we have spoken, Harshal, and you have sort of made it clear that for Razorpay, it is not something, I mean, you would like to be a platform-based service for a while, but for startups do you think there is acceptance now in the eyes of the regulators, in the eyes of the ecosystem, which was not there, say, a couple of years earlier?
I think definitely from the regulatory side, I think we are one of the most progressive regulators, which has always tried to find ways to get more people involved in the ecosystem. Like we saw, like the kind of licenses that Indian regulators have come up with. I think we cannot see too many examples across the world, like starting with wallets to payment bank license to SFP license, and now licensing on tap. I think there have been so much things that the regulator has tried to bring more people into the fold, and I think that's great for the ecosystem. Sure, like any other player, I think fintechs have been participating in some of these licenses. I think right from payment bank, where Paytm was the first one to get into that and have scaled it up big. A lot of SFBs are fintech, and now this one. I think depending on what the fintech is trying to achieve, I think this is definitely one of the ways that fintechs could get more directly involved in the money management itself, and try to do it in-house, end-to-end. And again, it will depend on what the fintech is trying to achieve. For Razorpay, as you rightly said, like for us, I think we believe that the area in which we operate, I think having banking license isn't really important to our objectives, because a banking license brings with it its own set of obligations, requirements. It slows down things a lot, and we've seen examples of some fintechs who have acquired licenses struggling to manage that license at times because of the kind of obligations it builds in. I think for our perspective, we are blessed that we have banking partners like RBI, like HDFC, who manage that side of the equation really well on their side, dealing with the regulators, managing compliances, the AML checks, the onboarding checks, and everything they do. And we can build whatever we want to build on top of it, like the ease of onboarding and the ease of transition and all of those things that we want to build. We're able to do it jointly with them, and they are, and each of us plays to our strength. Like we play to our strength on building strong product in tech. The banks play to their strength on managing actual money, in deploying it in the right way, in lending out in the right way, and other things.
Anjali, I'll come to you here. Where do you see like digital banking sort of heading in India, and especially from the context of it replacing a lot of physical infrastructure which banks sort of operate? If you could sort of elaborate on that.
So digital banking is definitely going to be much bigger than where it is today. We've just seen the tip of the iceberg right now. This is going to be so big that it will enable banking access to every citizen in this country 24/7. So you will be able to do everything that you do today by walking into a bank branch. You should be able to do it from the comfort of your home at any time. And to get to that level, it will require a lot of things to be done as well. And we've seen that even on the regulatory side, we have a progressive regulator who's already taking some of those steps. And we have seen liberalization of several of the rules that were there earlier, be it on the video KYC side or e-contracting side, e-signing. A lot of things have changed. So this is going to enable some of that going forward as well. While these things are definitely happening on the banking side, as well on the technology side, a lot of shifts are coming through. So we are seeing movement to cloud, availability of newer technologies, newer skills, newer ways of working, which is going to bring out a lot of new things and new products and services at a much faster rate. So a combination of these two together, both technology and banking, is something that is going to make this change happen. I don't think we've reached a tipping point yet. It's going to be a lot bigger, a lot more. But having said that, I don't believe that bank branches are going to disappear in the short run. India is a place where even if you create a absolutely new shopping mall or a department store where you have everything on self-serve, you will still find one person pushing a trolley for you next to it. So it's going to be coexisting together for some time. It's a good way to transition into a digital world. So I think there is enough space in a country like India for both physical and digital to coexist for a long, long time.
Absolutely. From MasterCard, Rajiv, I sort of want to come to you, with this question. you mentioned MasterCard has been in India for 40 years. It's pioneered a lot of sort of payment-led technologies. In the fintech space right now, there are like there's a lot happening across sectors. There's API banking, there's embedded finance. Even in payments, I mean, I think regulator is also pushing for innovation to happen, be it, through the way of, say, setting up new NUEs, or like there's a lot going on. So I think I just want to understand, like, what are the innovations happening in India pertaining to fintech and payments that you're most excited about at this point in time?
Ashwin, India is in a very unique position. And when I look back 4 years ago, when I came here and we started engaging with a number of fintechs, and I'll put these fintechs and partners of ours into 3 or 4 buckets broadly. We have identified, as I mentioned, the gaps in the products and solutions. We found on the front end, on the issuing side, for instance, there are friction points. KYC was one of the biggest friction points on the issuing side, as well as on merchant onboarding side. So in order to solve for that, 4 years ago, we signed up with a small fintech called SignZ and another partner called Citizen. These two solve for digital KYC and video KYC now in the last 1 year. So one of the partners is a specialist in the financial services. So with partners like RBL and a bunch of payment facilitators, we solve for digital issuance of debit and credit cards with our partners. With the same partners, RBL Bank is one of our earliest partners in that space. We have implemented less than 30-minute merchant onboarding, which, can you believe, a couple of years ago was taking anywhere between a week and 15 days if you're lucky. And if you're in a small town and village, it could be months by the time you got your point of sale machine. Now, thanks to digital onboarding and fintech who focus on regulation tech, like SignZ and Citizen, we are able to onboard hundreds and thousands of citizens and provide citizen services for the states, and with banks for digital issuing and merchant onboarding. On the value-added services side, we've got a very large number of fintechs we identified because we realized banks who are our partners needed fintechs because we, as MasterCard, also did not have those products in our arsenal. So we went about and identified partners like Zoho, for instance, for value-added services on the tax side and inventory side, accounting side, which can be plugged into a banking SME services, and the SME can, by a click of a few buttons, download inventory software, download various up to 40 solutions with Zoho. With some other partners, we have identified almost 1.5 years ago, buy now, pay later as a very, very important category, right? So that's a product which has been growing. So we have got a bunch of partners like Pine Labs and many others, where in partnership with them, we take the solution to all the banks so that they can offer buy now, pay later solutions. So similarly in Zeta, for instance, they are into consumer and digitization side, neo-banking side. And we have, as I told you, B2B partners like Paycraft who enable transit solutions. Now we've got HapPay, again, a B2B solution partner who enables payments and business transactions. So we have identified various fintechs, and we are taking them to all our banking partners. And the good thing is we are seeing success when we bring a well-curated, a well-researched product and solution gap to our banking partners. It merges very, very well because we have done a lot of background work for the banks who don't have to do all the due diligence that we've done for many months and years in some cases before we take that solution to our banking partners. So many of these partners of ours is not just for India or South Asia. We are taking them across the world. We are passporting those solutions which are unique to many, many markets across the world.
If I can just follow up on that question, We've also seen the entry of a lot of big tech companies also in this sort of fintech market, so to say. I mean, which is sort of as the lines are obviously blurring, but in the payments, in the lending, in the even the e-commerce, finance like the NPL. I mean, collaborations are happening between Amazon, like Amazon. So I just wanted your sense on how you view the entry of these, big tech companies in India's sort of financial services market. Do you think that will give a fillip to India's fintech ecosystem?
Yeah, indeed. Each of our engagements with some of these big techs that you're talking about is an example of how we are collaborating between the fintechs, big tech, and a banking partner. One example that I can give, which is a very successful one at that, is what we've done with Zomato, for instance. Zomato has got hundreds of thousands of restaurants and millions of customers on their platform. When we launched the Zomato co-brand in partnership with RBL Bank, Zomato was very demanding and wanted a completely new stack and a new user experience, which is completely new to the market. Digital first, digital only, extremely slick, integrated experience of a bank and a Zomato and MasterCard coming together. So that's one example where I can tell you it is one of the best examples I can give.
Anjali, I just want to understand from HDFC Bank's perspective, like how do you view these new set of banks that are emerging in the Indian banking ecosystem, and are you preparing also as well to sort of compete on similar levels or aggregate some of your services and sort of give it a sharper technology focus?
Ashwin, this is a natural evolution. We were born 26 years ago. We were born with the latest and the greatest capabilities available at that time. And we've been continuously growing and also evolving. So after 5 years, then something new came up. We absorbed that. Another 5 years later, newer capabilities, newer technologies came in. We started. When we started, we brought in core banking for the first time, centralized core banking. That was the latest and the greatest thing available. So it's a natural evolution. If an organization has to survive for a longer period of time, they have to evolve, they have to disrupt themselves, change and move to a newer set of paradigm. And that is how, human beings, animals, organizations, everything evolves like that. And you have to compete with the newborns who are coming up, the millennials who are much more sharper. You have to be nimble and sharper as well. So I think it's a natural evolution, and not just us. I'm certain about all the organizations across industries who were born a long time ago, and they are still continuing to fight fit. They have to keep evolving, and that's what we are doing internally as well. So a lot of the organization is always looking at newer ways to do things. What is a smarter way to do things, a better way to do things, whether it is technology, banking, or anything else. So we are always open for new skills, new ways of working, new technologies. We embrace that.
So I think we are almost done. We have almost run out of time. But I mean, of course, there's one last question, which we can sort of put forward and sort of get all your views on. I mean, the theme of the discussion largely was on co-creation, on collaboration, but it seems, I mean, as is with all sort of collaborative efforts, I mean, there's always a scope for improvement. So, Harshil, I want to come to you first on this. While sort of partnering with banks, what do you think can change, right? I mean, how do you think banks can sort of improve in working more closely with fintechs? I mean, be it, from an operational perspective, from a cultural perspective, from an addressing of a pain point perspective, like how do you think banks can improve, their collaborative synergies with fintech companies?
I think our interaction with banking has changed significantly in the last couple of years. The way banks approach fintechs, the way banks work with us now has improved significantly. And I think, and we are very glad that like now banks perceive us as partners in a journey together, and they want to co-create a lot of things with us. I think the first bank that we went live with is HDFC Bank. who was the first one who gave us an approval to start a payment gateway, and we continue to do a lot of things with them. I think on neobanking side, our first integration was with RBL Bank, and I think we do a lot of things. So I think banks are co-creating a lot of stuff with fintech, and they are definitely trying to evolve. I think the only thing that it takes time with banks is that, like, a lot of times on digital side, there's no single stakeholder, and a lot of times fintechs such as ours find ourselves confused when we want to do 10 things with the bank and we have to talk to 10 different people and try to get that alignment that, hey, we want to do 20 things with them. For us, all of these 20 things combine together towards one product. But sometimes in a bank, those 20 things are 20 different teams approaching 20 different things, and somebody might not understand the importance of the entire project. And because of that, one or two things we might not be able to do. So end-to-end experience to a customer is hard to deliver. A lot of banks are changing that with having specifically designated digital officer or digital people who are responsible for end-to-end digital experience. So it's becoming easier over time. But that is one thing that we still try to find ways around, especially with traditional banks.
Absolutely. And Anjani, I mean, same question, but characters are reversed. Like, what do you think fintechs can do differently?
Well, fintechs are definitely partnering with the banks now in co-creation. Earlier, it was just providing technology, but now it is providing experience and technology, a combination of both. So they are solving the problem end to end along with banks. They're taking some part of the problem, some part of the value chain, and disrupting it or trying to do it very differently, which is a very welcome change.
Sure. Thank you. And Rajiv from RBL, like, any quick take you would like to give for the same question? Like, what is your view?
So Ashwin, I don't think it is for us to say what fintechs should do or should not do. I think everybody is learning in the process. So when we met people in 2014, we were naive. As Harshal said, we were department oriented. Today, very quickly, we set up a banking as a service unit, which could actually do the coordination job internally more than technology. And I think all of us, and I'm not sitting here saying that the only evangelize one, all of us have learned that the customer has evolved, customer has choices, customer is empowered, and actually good for all of us in the long run because the market has expanded multifold. And like I said, the economics of doing business for us, at least, being a young entrant in the banking sphere, has changed dramatically. I don't need to go be in every nook and cranny in India. Yeah, my brand may not be there, but my partner is there who's creating a business opportunity for me. So to me, it's about being open to this, and this has to be the tone at the top. And I don't think this can happen just by putting one digital unit which will interact. So let me say we've learned, we've had our ups and downs, but we are far stronger for our own business because of this.
Got it. And Rajiv from MasterCard. MasterCard works with both banks and fintechs very closely. So, I mean, perhaps like a broader sort of, spectrum answer here.
Yeah, we've over the years observed the pain points of bringing these two unique ecosystems together. One talking in terms of quarters and years, and the other one talking in terms of days and weeks. So you can imagine the bringing of minds is not going to be easy with that kind of a thinking. So two clear things that I would like to articulate, and I think this is what we have found. I think from a bank's point of view, if they can identify areas of partnership and cooperation based on the things that I mentioned, which is primarily identifying the gaps in product solutions and the pain points, if they can do that, and then in the areas of partnership and commercial engagement, quickly shift to a culture of test and learn model, allowing innovators on the outside to leverage the bank's assets to create greater value, is one thing which I believe will take us to a higher level. And from a bank's, the other thing that I believe is missing in many places, that's the reason why some of the banks struggle, because they do not have dedicated teams and sponsors within the bank for a startup to drive internal executive support, quick decision making and execution. This is another thing which we have observed wherever things have not happened. This is missing. And one last thing which, because I've got two distinguished guests here from leading banks here, one other thing that I have seen very specifically in India happen is I've seen banks, for instance, beating the fintechs practically down to the ground on pricing and commercial negotiation because they have the capability to do that. And it's not a great thing because I'll give a simple example. For instance, we took one of our fintech partners to digitize the KYC process. Today, back of the envelope calculation, we found the bank is spending anywhere between 250 to 500 rupees on a KYC. And when we took this fintech to the bank, they wanted the solution plus, and wanted the solution at, you will not believe the price, at less than 5 rupees. And they are solving such a big pain point. In fact, they should be giving the same amount they're currently spending on a physical KYC, where they're spending 250 to 500 rupees and taking days to deliver a service to the consumer. And if they can provide the service to a video KYC or digital KYC seamlessly to the customer, they should be at least providing that. Okay, I can understand not the entire 50%, 5 rupees is not something, this is something which I've seen with some of the banks. Not all banks, many of the banks do understand the value that the fintech brings. But many times the fintechs are desperate for a name for that particular business. But exploiting a fintech to that level is something which I personally believe large banks especially should certainly look into.
Absolutely. And I think that's the perfect way to sort of bring this panel to an end. Some fantastic responses, great insights, and some, I personally learned a lot. I hope our viewers do as well. Thank you so much, all of you. Thank you so much for your time and for the wonderful discussion. I look forward to sort of seeing you in person soon. Stay safe, stay healthy. Thank you so much. Thank you.
Thank you.
Thank you very much.
So partnerships and co-creation are the way ahead in this contest between banks and fintech, all in service of more choices for the customer, of course. Those are my takeaways from that insightful discussion. Share yours with our hashtags ETFIS and hashtag financial inclusion, and do tag us on our social media handles as well. With that, we've reached the end of the day here at the summit. I hope you've had some time on hand to visit our special experience zones set up by our partners, as well as the networking zone to interact with other attendees. Join us again tomorrow at 3 p.m., where we start day 2 of the Economic Times Financial Inclusion Summit. And we have some fascinating voices speaking on several subjects, like the impact of the direct benefit transfer scheme on financial inclusion, the role of cybersecurity in a digital economy, as well as a special session on the challenges faced by women entrepreneurs in India. I'm sure looking forward to it, and I hope you are too. Before we wrap up for the day, I'd like to take a moment to thank our presenting sponsor, MasterCard, and our banking partner, FinCare Small Finance Bank. I've been your host, Abha Bakaya, and I will see you again tomorrow. Thank you for joining us.